What's up, guys? Welcome back to the Asia session stream. I hope you guys are doing great. We just hit that 150,000 subscribers. Damn. Damn. Can we get some W's in the chat for that? 150K. I think I joined back when it was like maybe 15. I'm pretty sure I joined when it was 15. So from 15 to 150 is huge. So big shout out to all the Tradeify TV hosts and producers and everyone that was part of this. Amazing. 150 is definitely a huge milestone, and hopefully we'll get that 150 party. I'm waiting for that. Every time there's 50 more, we do a party, but I think the 100, between the 100 and the 150, it was just too close. I think the party will be at 200. So yeah, I hope you guys are doing great. I did absolutely amazing today. I took one trade, one win, and it was a quick scalp on NQ, very fast in and out of the market. Entered within this gap here at around 196, ended up taking my profits around 175. Little 20-point scalp, netting me around 300 bucks on 5 accounts. So I am only 2 trades away, again, from a 11K payout. So if I am able to win my next 2 trades without losing any, okay, I am going to be in a position where I'm going to be able to request, again, 1,500 or even more. So yeah, definitely very happy with this. Very happy with the overall trading that I've been doing within the last few months. This year has been amazing. I think I showed you guys the dashboard. We can show it again, but this is not to flex, or this is not to just show you the dashboard for anything. It's really to give you inspiration and show you that it's possible, because I requested my first payout on Tradeify exactly 325 days ago, and within this week, if I am able to request another payout, it will be very, very close to 100K in sim payouts and over almost 15K in live account payouts. So I'll show you again. We done that yesterday, but I think it is also valuable to do it again today. So you can see right here the payout history. If I go back all the way there, all the way to the first payout I requested on that, it was back on August 27th, 2025, right here. Payout on Lightning funded accounts. And if I go all the way here now, okay, this is the last series of payouts that I requested, 2.3K on 5 accounts. That puts me at 33 payouts and $82,000 made within almost 320 days. And if I'm able to win my next 2 trades, it will be around $94,000 in total payouts in sim, which will be 38 payouts in total, and above. So I have 14K in live payouts. So I had the live account like 2 or 3 months ago, which I was able to run to about above 14K. And so 14 plus 94, 108. So let's see if we can do that in 365 days. That Twitter post will go crazy. Let me share. Let me go now on Tradeify so you guys can see well. But my current account balance on Tradeify, that's my current account balance on Tradeify. 154,105. So $4,000 in profits per account. And I would say, like, within this set of accounts that I was trading, I had big days. I had days where I was able to capitalize on the same exact setup, but putting my stop loss to break even. So I know I'm the 1-to-1 risk reward king, but um, I definitely did get some big days out of going for a 1-to-1 at first, but then putting my stop loss to break even and praying. Because at that point, really, if you think about it, um, if you have an initial target and you don't put your stop loss to break even, then the strategy becomes risk management for you. So I hope this gives some inspiration to some of you guys. It is possible. Like I said, trading props is not necessarily about having the best edge in the game. It's about being the best risk manager and knowing that even if you blow an account, the statistic behind it will probably make you a winner if you know how to manage your accounts. Because you don't need necessarily a positive expected value. You need to understand the business plan, the business approach of those firms. Because once you get one singular payout, you probably made up for a lot of the evals that you paid for in the first place, you know? So it's a different business model. It's a different game. And this is also what me and Tradeify are trying to give you guys as an education also within the next few weeks/months, is going deeper into the education related to props. We don't have this in the space. We only have education related to trading, but trading is such a different, like I would say it is a different game with trading a live account and trading prop firm accounts, because your ability to stomach those blown accounts and having a good relationship with understanding that, okay, even if I blow one or two accounts, I have an aggressive approach. It is for the better. Within the third or fourth try, I will make money. And this is something that a lot of people don't grasp when they get into the business model, but this is something that is truly life-changing when you understand it. And for me, for the biggest part, I was always psychology number 3, risk management number 2, and um, technicals and edge number 1. It was always like this for me, but I understood that edge is not even number 1 when you trade props. It's business approach, business plan, and understanding which account types to buy if you have this approach, if you have this risk reward, if you have this amount of money to spend every month on your accounts. So it gets a little bit deeper. Definitely, definitely a lot of education to be made within the next few months on Tradeify regarding this, and I'll try my best to give you guys all the value that I was able to get, and all the understanding that I was able to get with this business model. So yeah, it is. I would say, like, if the smaller your goals are going to be, and the more attainable they're going to be, the more determined you will be in the short term, and the less doubts you will have overall. I think going heavy and decimating a lot of accounts right from the jump is something that a lot of people do, which is not a good thing, before truly understanding the business behind it. Once you really have the numbers behind why you should trade the way that you do, then it really makes sense to go aggressive. you know but yeah, if you have any questions, make sure to type them right now. Let me know. It could be anything, really. It could be I always ask you guys to either ask questions or let me know what's in your mind right now, and I'll definitely help. I know the Asia session chat is the best. We always have those deep conversations. Sometimes it's not that deep. Sometimes it's pretty brain rot, if I can qualify that. But yeah. So I only need 2 more winning days with 250, and that will put me to 500, exactly at the same. So 11,500 or $11,600 of payouts again. So that will be probably above $24,000 in payouts within 2 weeks, a 2-week span, which is crazy. Sometimes it will be dry months. I will not request any payouts for like 6 weeks, and then sometimes in 2 weeks you'll request 25K. It is that's the reality of the game. It is what it is. how do you deal with days that you can't find any trades in? I haven't taken any trades for the past 2 days. Good question. I'll talk a little bit more about my overall approach and what I was able to understand from this when I was trading props. So at first, I had the perspective of I need the highest win rate because I have a system that has a low risk to reward. So I cannot go by I cannot make a lot of profits if I'm gonna take those back-to-back losers, and those profits are gonna be eaten by those losers. If I have a 65% win rate, if I don't have a 75% win rate, that's what I was telling myself. But I understood the power of frequency, okay, meaning that instead of always going for the perfect picture perfect setup, which only happened 3 times a week, okay, I understood that sometimes it was even better to go for a lower win rate strategy, but that had a bigger frequency because it would give you a bigger R multiple at the end of the year. So at first, I was the kind of guy who only took 10, maybe 11 trades in a full month. I'm telling you, that was me. But the reason why I stopped doing this is because I had big problems with my psychology, because there was months where I should have ended green. I should have ended profitable on that month. But I was staring at the chart from 9:30 all the way to 3 p.m. and I only had 7-10 trades in a month. And when I would get into a 2 or 3 trade losing streak, I would go crazy. I couldn't accept it. I was like, there is no way I am being so patient and I'm not being rewarded for my patience. And when I understood that it was triggering me. I needed to switch something. And what I did was that I went for a little bit more of an aggressive approach where I took more trades. I was being more aggressive, understanding that my win rate was going to be lower. Okay. So I would have to go down to the 65% win rate instead of going for the high 70s or mid 70s to not have to deal with that psychological demon that would hunt me and that would, lead me to blow accounts, because I couldn't get by the fact that I was being so patient and I was not being rewarded for it. So then I adapted my strategy. I adapted my frequency of trades. So now you'll see me take 1 to 2 trades a day, and understanding the math behind it, which is, okay, I'm trading props. Let me go back to TradingView here and you'll understand it way better. So I'm trading props, and my goal, okay, I know that with my approach, I have a 1-to-1 risk to reward. Okay. And if you have a 1-to-1 risk to reward, the most important thing to know when you're going to trade props is how much you should risk per trade. And you only know how much you should risk per trade when you have so much data on your system that you can now know your risk of ruin. What is the biggest amount of trades that you can take back to back that you saw historically within your backtest? And for me, it was between a 5 to 6 trade losing streaks. That did not happen too often. That happened, but I knew that if I was not risking at least 1/5 of my drawdown, I was letting money on the table, because the likelihood of me getting into a 5 to 6 trade losing streak was extremely slim. So then, knowing this, I knew that I had a high risk. Okay, my risk was high risk per trade. Okay, but I know that my risk is high on every single trade, and I am probably not going to have a 5 to 6 trade losing streak. Okay, if I only take 10 trades in a month, okay, and I have, let's say, sometimes, the win rate is going to fluctuate from month to month because the wins and losses are completely randomly distributed. So if here, within those 10 trades, it takes me a full-on 1 month to get those 10 trades down, and for some reason on that month, I won 7 trades, lost 3. 3 Ls. With a 1-to-1 risk to reward, that means that you're up 4 Rs. Okay, 4 times what you risked in the first place on every trade. Okay, is that enough for you to request a payout? No. Okay, so what I told myself was, okay, if I am risking so heavy, and I know that there is a very slim likelihood of me getting into a 5 to 6 trade losing streak because my risk to reward is so low, then I truly understand that no matter how many trades that I will, no, basically what I said to myself is I'm basically getting rewarded on my next series of 10 trades rather than being rewarded on my next series of 100 because I'm high risk. Okay, so if I'm being rewarded in my next series of 10 trades, then that means that if I am very selective on my next 10 trades, okay, and the wins and losses are still completely randomly distributed, it will not have, it will take me too long for me to request a payout or build any sort of buffer. So I went for high risk, but also high frequency, because that what would the system give me is basically big winning streaks, but also sometimes, of course, you'll get into some dry streaks / losing streaks, but at least I am, at the end of the month, I am either requesting a payout or in a situation where I had a very bad streak, so I'm blowing the account. So that's pretty much how I do things. So I opt for something that is a 1-to-1 risk to reward. My biggest losing streaks is between 5 to 6, so I adapted my risk around it. But then knowing that I risk so high, I know that I'm getting rewarded on my next series of 10 trades. But 10 trades is such a small sample size that even if you think that by being selective, you will see better success, 10 trades is so small. It doesn't really matter. It's really up to the risk to reward to decide if you're going to get paid out or not, if you truly understand what I mean behind it. So then, yeah, that's the overall approach. So I go for higher frequency now. And to come back to your question, what can you do if it's been 2 days that you did not take any trades? The question is that really how you want to do things, being very, very patient? And let's say your strategy truly doesn't show up that often, or are you being very, very picky and very selective, thinking that it will give you more edge in a series of 10 trades? You know, so for me, I have such a different way of going about things, but I would say I had a very hard time at a certain point to get past that psychological demon which hunted me when I was being so patient and not rewarded for it, you know? I hope it made sense. Definitely a lot of things that I said here, but see how the day closed. Wow. For anyone who's been here for a long time on Asia, look at that distribution on the weekly. Exactly what we envisioned before the week actually started. On Monday, I was telling myself the likelihood of this next weekly candle to close bullish is higher than us seeing that next weekly candle closing bearish. That's what I was telling myself. Why? Because of the way that we closed within the previous bar. I would never try to sell or predict a reversal, especially without seeing the previous weekly high being taken out off of a strong week, coming from a strong week. So then I was telling myself, okay, Monday and Tuesday will be accumulation. CPI will probably be the distribution. If the distribution doesn't happen during CPI, then it will force us to look for a distribution during Thursday and Friday, and then see a closure back to form the top wick of that weekly bar. So this is exactly what happened. Monday, Tuesday, Wednesday, Thursday, and now we have Friday. So going into this day right now, okay, what do you guys think my bias is? right now? Is it longs, shorts? Where do you think price is going to go from here? Exactly, Beastie. Positive expectancy. So low win rate plus high frequency with a 1-to-1 still gets the bag. Facts. It does. And that's something I understood a little bit too late. Not too late, but I wish I knew that information before I spent so much time being patient, you know? No worries, no worries. Any videos to learn Tradeify? I did not watch any videos to learn Tradeify, really. I don't even know any videos that I can suggest to you. If anyone has a video that you could suggest to my brother Strobe, tag him here, because I have no clue, really. It's just that I am afraid to blow another account since I am on my 5th account after blowing 4 accounts back to back. Thank you very much for the breakdown. I appreciate your time. Much love, brother. Take your time. You don't need to put risk on now. You know, you don't need to put risk on now. You can do a lot of efforts in backtest to validate your overall approach. And then when you are truly, when there's data backed behind the way that you trade, you will not be so, you know, you will not be so hesitant to take a trade. Long, 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 long. Go down first, then close the highest. Damn, okay. You're him. Okay, so for me, I always try to project the next candle. Okay, but this is a Friday, meaning that this is the last day for that weekly candle to close. You can see here there's 22 hours left for that weekly candle to close and top off. So here we broke out from that daily bar. When we break out like this, if you were looking at a 1-minute chart, if this chart right here was a 1-minute chart, would you long or would you short the next candle? That's always what I'm telling myself. And that's how I project my next candle. How is it most likely going to close? And here for me, I would never try to sell coming from such an aggressive bullish daily candle. Okay, even if it was a 1-minute chart, I would never try to predict that the next candle will be a down close candle, especially not without seeing this previous daily high being taken out, or at least seeing a manipulation upside towards this range and then digging below. Okay, so what does that tell me? It tells me that now I would want to see us go back towards that daily high within the Asia session opening. Okay, why? Usually, you know, I would say most of the information that would be available online would tell you go for previous daily highs and lows. Try to go and take a trade towards them, basically. And if you mark out the previous daily high here and the previous daily low there, right here, okay, what you will see is that we have those two levels being marked out. But if you open up your chart and you mark out the highs and lows of the previous daily candle, I would say 90% of the time, literally 90% of the time, as soon as you wake up, the previous daily high or the previous daily low is already swept. Okay, so it already invalidates what most people are looking for, which is target those daily highs and lows. You would need a tremendous reversal from the overnight session for you to have either the previous daily high or the previous daily low intact when you open. And when you have those intact when you open, they become huge magnets. But basically, what I found was that depending on the strength of the closure of that daily bar, we will draw back towards the daily high or low within the overnight session, which becomes a very good scalp slash trade overall to take within the overnight session. So here, for me, what I would try to do is pair up the hourly with the daily. if we can open up lower potentially here on the 6 p.m. candle, faking out, trapping out the sellers here, thinking that price will create a reversal on that break. But then we see the 7 to 8 p.m. 1 hour candle actually being an up close and creating bullish structure to the upside. I will then project that the next hourly candle has more chances of also closing bullish, which is exactly the same bias that I have for the daily, going for that daily high. Okay, so if I have a very strong closure towards my draw on the daily, then I will go for a long, which I am using the 8 p.m. bar as a catalyst. So 8 p.m. Open as a catalyst to then see that previous daily high to get swept. So here, the question that you need to ask yourself is, okay, how do most people trade? Most people will look at those levels and will wait for a sweep and then a reaction from it, and then we'll trade back, let's say, to 50% of that candle, and we'll basically most of the time play off of reactions of key levels. I am never going to do that, and the reason for it is because so very, I would say, like, those key levels and the key levels are not subjective. Okay, I'm not talking about the subjectivity of those key levels, because you can mark them out every day. What really tells you what I have, the reason why I have beef with that way of trading in general is because of timing. Why do you think price will now reverse at that exact moment? Because we have a sweep of that previous daily high plus a shift in market structure. So it's really about the timing instead of being the problem of the key level plus the reaction. So like what's going to happen, let's say for people who will wait for that sweep, is that they will wait for that sweep. It will sweep it, shift, okay? It will be attracted into shorts, but then price will consolidate inside this level and build up a lot of orders here and then create the real move, or even just bounce from it, you know? So what is the timing here that we're looking for? So for me, I don't trade that way. What I would want to see is projecting my higher time frame candles. So there's two ways I can go about those levels. Number one, like I said, I would try to look for an hourly candle to close in the direction of that daily high. So then I would project that the likelihood of us seeing a bullish candle from the next hourly candle is very high. So I would remain bullish for the entire hour and fade every single bearish shift in market structure to then see the most recent high being used as stops in order to run back higher towards the previous daily high. That's number one. Or what I can do, let's say for some reason price just popped that daily high too aggressively, then there's two ways I can go about it. But I would need that candle on the higher time frame to give me the story. So if I do have an hourly candle that bursts through that high and closes above that daily high, then I will not fade that hourly candle. I will not fade the fact that I'm still, if we're closing strongly above that level, I am projecting that the next candle will do the same thing. Because if I was looking at a 1 minute chart, I would not sell the next candle because of that breakout. Okay, so then within the next hour, I would remain bullish only and fade any shifts in market structure to then see the most recent high being created and then see the bullish close. Okay, or one thing we could potentially see, which is not the breakout, and I would be long for 7 to 8 p.m. let's say, if we sweep that high but then we close back. If we for some reason sweep that high and then we create this, then what do you think my bias will be? I am going to be projecting that the likelihood of the next bar to close bearish and see those lows below us in the gap is going to be higher. So then I will remain bearish for the next hour. But that's how I'm projecting if I'm bullish or bearish. But whatever happens within the 1 minute chart within that level, in my opinion, is noise and used to trap participants. That's how I read it. It doesn't mean that it's the right way of reading things. That's my process, my overall hypothesis on the market. If you're hating right now, let's have beef. Come on. But let me know if you like the overall approach, or if you're like, all right, I prefer the way that I do things and I don't really mind. I'm just here to vibe, you know. There's gonna be a lot of people that will love it, some people that will hate it, but it is what it is. All right, so that's my game plan. We will try to go for that daily high. One thing that I'll say though, if you're someone who looks for previous daily high sweeps and then try to go for the opposite side of the range, please stop doing that. Because the likelihood of us fully reversing from a daily high to then back to the daily low is, I would say, is like pretty much like 20% statistically. So I would prefer to long the previous daily high even if we're above it than shorting it. I swear. But that's how I view things in general. All right. So I'm sorry if I disrespected your overall analysis or I disrespected your strategy, but you know. Hey Moss, I'm considering trying out the 150k select. Do you scale aggressively in evals, try to pass it as fast as possible, like within 3 days? Yes, that's what I do. Do I think anyone who, if you don't have too much skin in the game, it's probably the worst thing to do, because if you don't know exactly the stats behind your edge and you still need to put in some reps to gain confidence, and you know, you don't necessarily have too much time to back this is also a reality of some people, then, you know, take those evaluations slowly in order to build confidence and in order to show yourself that what you're trading actually works, you know. So the evals are good to take slow if you cannot really necessarily put in the reps on the side. And yeah, but for me, you know, having unlimited time, no responsibilities, I am absolutely full porting the 3 days, 100%. Being honest, but do I think most people should do that? No, absolutely not. No. But that's how I do it, because I value opportunity cost more than what I paid for the evaluation as a fee. So if you paid $100 for the eval, okay, instead of me thinking about that $100, I'm thinking about the cost of me not trading a funded account. So if I was going to play that very slowly, and let's say I was a monk, okay, I was like $200 days every single day on that eval, then let's say after a month, I would be able to request a $1,500 payout for some reason. For me, I value the fact that I should have been able to request 1,500 more than losing $100 by being aggressive. And even I prefer losing 400 trying to pass 4 evals aggressively and then making $1,500 of profits to then net 1,100 than actually taking it very slow. But the truth is, if this $100 goes away from your own pocket and you're not reinvesting the money from the business, which is the payouts that you've already done throughout the year, then that $100 become like $100 becomes very, very important for you to not blow, you know. So shit, we do have my brother Afiz being here with us tonight. Let's bring him in. What's up, brother? How you doing?
What's up, man? How's it going? Not too bad.
Doing great, doing great. Let's go, man. You're looking clean, brother. You're mogging.
You said that last time, bro. I know, I'm getting self-conscious every time I'm on stream with you now. I gotta make sure I'm up to standard.
Nah, you look good, bro.
Good. Did you catch Nasdaq?
Actually, I started looking at the chart at around like 10:40-ish. I took a short, actually. I took a short, like a very quick scalp at around like 195 here. 20 scalp left. And yeah, what about you?
You're 1 day away, right? You're 1 day away from your payout. I saw on Twitter.
2 days. So nice. Yeah.
Yeah, I like looked at the open and I saw Nasdaq take the entire range in like one candle. So.
Yeah. I think everyone was expecting like a bullish distribution from that weekly candle, but man, the pop was very unexpected. It's like 9:30. If you did not answer from that first 15-minute and like took the risk of entering such in premium, there was 0 entries. Literally.
Oh yeah, 100%. It was sad. It was like the same like draw. I probably lost 3 trades in throughout the week trying to get long trades.
Yeah,
on
that's
asset.
so. Yeah, that's literally what I was saying to myself today. I was like,
Yeah.
damn, like
All
I
delivered,
really
like,
thought,
yeah.
I really thought we would have more aggressive opens like this in the beginning of the week, or like at least Wednesday. I was like, CPI day is definitely going to be the distribution, and we're going to put in low of week. But yeah,
No,
did
yeah,
not
we like
happen.
we like completely edged all those highs for an entire week, and then in 5 minutes today we hit the whole. So yeah, it was interesting. I saw it and I was like, all right, there's nothing I trade in indices today. I just like, all right, I'll come back tomorrow, see what's up.
Yeah. Okay. So, bro, I was gonna ask you, if there's anything that you are interested in tonight, in terms of trades or in terms of like your game plan for tomorrow. Okay, if you can share your screen, also, if you can do
I
it.
hope I can share my screen today. I realize it might be because I'm on a Mac. I'm using like Google Chrome on my Mac. Maybe that's the issue why last time.
I know how to do it though. I'm pretty sure. Like I had problems also sharing it on my Mac, but I found how.
Did you?
Yeah,
So maybe
because sometimes my connection
if
just.
it doesn't work today, you'll have to walk me through that over the weekend, or next week. I'll just like run it on my Windows side. Maybe that'll work better.
Yeah. Yeah, we see it.
I think
We see it.
Yeah, I can see it now. Can you guys see it?
Yeah. Wait, I think the producer. Yeah.
Oh,
now,
cool.
Now we see it.
So yeah, I'm gonna move this up to here on my second monitor right here. Cool. All right. Yeah, let's take a look at some charts then. Cool. Finally, I can share my screen.
All right, let's do it. But Afiz. Okay. Let's do it slow because I really need to understand everything. Okay. Because
I know. After
I
our
remember
last
few
segment,
things.
I know. I gotta slow down this time.
I remember a few things. I remember like PSP.
Yeah.
Okay, PSP. That concept is tough. I really like it, by the way. It's very tough.
Yeah.
So like when YM prints a bullish bar and NQ prints a bearish bar, that's what it is. It's PSP, right?
Yeah.
Okay.
How's it? How is my? I'm gonna do one chart at a time. One chart at a time.
Yeah.
I don't know if like, on the stream it shows all three of them. I'm on like an ultra wide monitor, but I should.
No, it shows one right now.
Okay, can you see all three if I do this?
Yeah, but try to put the middle one a little bit smaller. I don't know if you can do that.
Yeah. It's like it's pretty. What's an ultra wide I'm on? So I don't know what the view looks like.
Okay.
Here.
It looks alright. It looks alright.
Okay, cool. I'll
let you know if you need to like.
Yeah. You can see it a bit
easier.
Yeah. So let's take a look at the two markets I trade then. So I trade metals and I trade indices.
Oh, you trade metals?
Yeah, like gold.
I did not know. Damn.
So we'll start with metals and we'll go from a weekly perspective. So Friday for me is one of the easier days to trade in the week because it's only one of two things. If the weekly candle hasn't reached an objective right on the chart, then Friday can be a distribution day. Now, in most cases, the majority of weekly profiles, which is an ICT concept, see Friday acting as some sort of counter, meaning it usually forms, off of the high or the low of the week. And that's because in a case of a bullish candle, you see we're trading off of the high right now, and this candle is likely to have a close right somewhere above its opening price if it's bullish. So we have a good context typically on Fridays as to where we want to see price go directionally. And typically, once we've engaged, an area of interest, we can look to trade inside of the weekly range for Friday. So my analysis is really simple. I'm looking at the current week high, the current week low, and I'm saying, okay, did this candle engage something relevant to the left? Well, clearly here, we come into this weekly imbalance here. Small imbalance, but it's also a swing point on the daily on gold. And we obviously get a reaction out of it. That means you can see this candle here is giving us a pretty strong reaction off this high. So we can zoom into this candle and say like, okay, so like what could tomorrow do? As you can see, right? Monday here offers an expansion. And then we have this really high resistance type of move into the high right here. So we have like a 3 drives pattern, if you know what that is. I don't know if you ever studied like 2022 content from ICT. It was like 1 drive, 2 drives, 3 drives. Yeah, is that familiar? Okay, so we have something like that, and then you can see we have this, expansion day. So now we look at the market and we're like, okay, so tomorrow, what's more likely to hit? The previous day high, the current weekly high, or the previous day low, right? So realistically, I'm pretty one-sided, and it's just for this low. My analysis for the next day, right, on both of these markets become, okay, let's see if we can frame something towards this low. And essentially, I'm now looking, pretty one-sided just to trade into previous day's low. I don't really know where the weekly candle is going to close. I don't assume it's going to go towards the current weekly low. I just say, okay, this could, close back in the range, take out the previous day low. So that's kind of my look for metals. Simple as that. How I would approach that now is like, okay, if we're going to go towards this low, I want to find some sort of key level in the previous day's range, right? So here's what it looks like with that SMT thing that we talked about. High of the week here is made from that SMT. That's a swing point.
Yeah.
Now I can say, okay, well, now we can just have a continuation day. It makes sense just to target the previous day low. Nothing too complex there, right?
So you'd look for a gap now and an SMT to be formed within the gap to then short back towards the day. Okay, you literally have the same approach as me, basically.
You got it, brother, right?
Highs and lows, you have the same approach as me then. I just don't, there's like few things like PSP and stuff that I don't look at.
Well, you can see it right here, right? What do we say?
That's literally I literally trade the same way right there.
Yeah, that's what I said last time. I think me and you actually trade far more similarly than differently. It's just a few things that we use to filter.
Yeah.
We both trade candle twos, right?
Yeah.
Reversal candles. You can see I'm confident with trading away from this high because we have a PSP here forming the high of week. So this is a 2-stage SMT. That's where the complexity came in last time. It's like, well, divergence between daily candles, right? And that's great. That means you have a swing point. And how do I know it's a real swing point? How do I know it's likely to hold? Then I just say I need to have a second stage cracking correlation, which is going to be, as you can see, this candle here closes as an up close candle. This is a down close candle. This is your 2-stage PSP. And then most importantly, outside of all of the kind of fancy concepts, we have expansion away from this and we create gaps, right? So really now we're just trading continuation order flow, right? We print gaps away from this high, right? Especially on gold here. And you can see if we're going to reverse off this low, we'd have to expand back into the range. So we have a clear invalidation, right? If this low is going to be the low of the week and we're going to trade back into the range, well, then we know that there's not going to be a respect of this 4-hour gap. So overnight, actually today we might get a trade, honestly, in Asia session because we're opening up near that key level. This becomes the invalidation for the entire day for me. If price is to aggressively trade above this invalidation, well, then I can't really look to this low anymore, right? Because I know if I look back into the previous day's range, we'll use like a sandbox, you can just see it, like a previous discount. There's only one key level in this previous day range I would like to see price form a high from. I would like to see this next daily candle look something like this, right? Where it forms its wick inside this gap, and then it expands lower from the gap, right? And a very, very deep retracement. Say it came all the way back into here. Well, that's not going to really support any sort of expansion lower, right? Then the wick would be very large. It's more likely just to close back in the range. So if price does this, opens and trades much, much higher, I'm not going to short all the way back down to this low on a Friday. It would make almost no sense for me to do that, right? It's more likely just to close inside of this range then. However, if we form a high inside this gap, which we're going to look for the same things look on daily, right? Some sort of PSP, then we can trade down.
I like that. I have the same bias. Exactly.
Cool. So that's metals. It's like pretty easy because now we just have one level on our chart and kind of all of our analysis simplifies to, and I'll do it right now actually. I'll just set an alert. And what I'll do is I'll just set an alert at this gap like this. And this is what allows me, not to stare at the chart all day typically, If I get my key level engaged, depending on what session that's in, if I'm trading that session, Asia today, then I'll trade it. If it doesn't hit till tomorrow in the morning, I'll look for New York, right? But I'll put an alert at that level, and I'll also look at the correlated asset here, silver. And you see, there's no gap. That's okay. I don't need there to be a gap on both assets. I just need one of these assets to hit that high, essentially. So now we have an alert set. Kind of our job is done for metals. We just wait. We see what happens when we're up in there. Obviously, we're not going to do this and just like, great, we tagged the gap, let's short it. This is not how we trade. We're going to wait for a swing formation and then trade away from that swing formation. So that's metals. Pretty obvious, I think, one-sided, at least in terms of a draw. Indices is a bit more challenging, in my opinion, because if you look at this weekly candle, we can ask that same question we asked for indices. Look at YM. The proximity away from the high here, pretty far. Like, I don't expect that this weekly candle tomorrow is going to flip and make all-time highs like ES did. I think that's unreasonable.
Yeah.
So this is going to close as an inside bar. An inside bar is a consolidation candle, right? So I actually don't have a draw on liquidity for YM. If you look at this looks terrible. In fact, yesterday was a true consolidation day, and a consolidation that takes out both sides of the range. This is taken out on micros, if you will. Yeah, consolidation candle that takes out both sides of the range is by definition a seek and destroy type of day. It means market had no direction. It opened, it traded low, then it traded high, and then it traded low. And you can see that on the lower time frame quite clearly. For an asset like the Dow, there was almost no direction today. It literally just took out both sides of this range, and this is extremely difficult to trade. Now, because of that, and because we're so far away from both the previous week high and the previous week low, I have no draw on liquidity for that asset. In fact, I don't really care where this weekly candle closes. I'm going to be much more interested to see this weekly candle close and us to print this weekly gap. Now, like we talked about last time, you already know and can already see what's forming. It's pretty obvious. This is going to be forming a PSP on the weekly chart, and this PSP is actually quite telling because here's where you can use some advanced Kraken correlation logic for phases of price. So it's not just SMTs, but it's also telling you a story about the whole market here. So humor me. This asset, YM, is the most bullish asset in the market, and we can clearly see that YM leads distribution to the buy side first in the market. Now, when we consider how far away from the all-time highs NASDAQ is in relation to both the S&P and the Dow, this is telling us a story, because we have to ask ourselves, is the NASDAQ going to break this SMT like we talked about yesterday? Most SMTs break. Or are we going to do this? Well, there's a couple ways we can know. The first is going to be a simple argument. It's just proximity to this high. The closer we get to this high, the less likely we are to leave this as a failure swing. You can see this in all cases. The closer in proximity we have as we expand towards a high, the more it becomes a magnet for price to draw into because there's buy stops resting above them. Whereas when you have SMTs that are very spaced out, look at the lows here. So look at this. Dow leaves this low, right? NASDAQ and the ES both take that low. That's not really expected, right? We don't expect these very shallow types of SMTs to form. So it's hard to trust that. What we do trust is when this expands away, right? And you can see, okay, now when we're here at this point in the range, we're so much more likely to go take the highs and we are to come all the way back down to the lows. So proximity matters, right? If we're expanding towards a high, we're probably going to go to that high and vice versa for a low. So with NASDAQ right now, we're in a very interesting position because we know, well, we are pretty close to these all-time highs. We're pretty far away from the low, right? And this low, of course, as you can see, just to, play devil's advocate, we make a two-stage SMT, right? We have that PSP here again. It's really nice to see. It looks like this. And this is what formed the low of the monthly candle, right? Last month. And then we expanded away from it with the open of this month. So this is our bias on NASDAQ in the long run. I can put this on our chart. And the reason why I'm talking a lot about the weekly chart is because for this week, I actually don't have a draw on liquidity for indices. But for next week, I'll probably be looking to take a swing trade. And that'll be very early in the week. So anyone listening, you're going to see exactly how I approach trading my personal account, which is swing trading mostly, when I have models that look like this. So in this weekly candle, once YM trades into the high, I only have to ask myself with the ES as well, like, what's happening above here? This becomes the question mark. Are we reversing here? Because if we're reversing and we start to V-shape lower, that means that NASDAQ could actually leave this high. We can trade back into the range. Now, what I can see here by last week's closure, just look at the body closing through the high, is that we're not reversing. And this is very interesting to me because this means that price to close last week's candle offered this consolidation. That's what the wick you're seeing is. And if I go down to a lower time frame, you're going to see it. Okay. That's a retracement or a consolidation. It looks like this. Okay. That's not a reversal. That looks like that. And it's important because we know that assets that are correlated are likely to trade into the same highs and lows. So in this case, all I have to say is, well, NASDAQ can really get up to all these equal highs. This is very interesting for me. Now let's play out this week and see what happens. You can see here, look at the strength of these markets shifting. So while this market here is just consolidating, it really just is holding. Right? No, you wouldn't say this is much directional movement. In fact, if we look at the weekly open, this gives you a really good indication of what consolidation candles look like. This right here is the weekly open. Okay. Price has a really hard time trading above or below the weekly open for an extended period of time. In fact, deviations above the weekly open, right, are sold, and deviations below the weekly open are bought. And we're really, look at the sensitivity to it. This just means that this candle is going to close as a doji. And you can see that. It's going to close an indecision candle because we're not expanding through the highs. We're not expanding through the lows. We have a very tough time expanding out of this range. So I'm going to just draw this in as a little consolidation box. And this for me is important because while this asset is consolidating, NASDAQ here is expanding to catch up. So this is going to be how we think of something like SMT breaking. I can say with certainty that because this asset has failed to do this, V-shape away, this asset has failed to do that, V-shape away, and instead we're seeing this asset gain strength, this is very likely to break in the market. Now, mechanically, there's not really much to do with that information the way I've laid it out for you. That's just kind of a logic of the phase of price. This is consolidation and this is expansion. Great. So how can we actually get on side with a swing trade? Well, this is where we use some quarterly theory and cracks and correlation, which essentially just capture what I'm saying. So a PSP
you use quarterly theory?
Yeah, so that's what a PSP would be. So a PSP, the way I think about it, which is not the way that it was introduced by Trader Day, who created the concept, is a crack and correlation in the phase of price. So the way I see this is that this candle here is an indecision candle, and it makes sense. Is there anything looking left to trade into? The answer is no. We're at all-time highs. However, as we know, expansion into consolidation is a continuation signature. So this type of holding pattern that we see in the market would be very similar to like a flag, a symmetric flag that retail traders use. They would call it like a bull flag, and this would be a breakout. Or ICT traders would probably see this as like a fair value gap as a retracement to then go higher. Both ways we know that this signature in price typically does not lead to this. We do not see expansion into consolidation into reversal. So I know that this precision swing point is a crack in the correlation of price. While this asset expanded in the week, clear, look at the distance from the weekly open. Same logic, right? Well, this asset created a low and then expanded away from it. This asset really had a hard time actually deviating either side of its weekly range, of that weekly open. That tells me that this asset's really in a hurry to get up here because this asset's waiting for it, and as is the S&P. Now, what's interesting about three assets in the indices is that there's always going to be this strength argument that comes into play because one asset will always trade into a lower high first, always. S&Ps always form. Now, in this case, because we can observe this on the weekly chart, I'm now looking for this candle here to close as that PSP. So when this candle closes a PSP, it's not just a precision swing point. What are we also creating here? Which all ICT traders know, it's a gap. This gap in and of itself tells us that the market's not reversing from these all-time highs. So we're creating a gap and we have an area to go higher from. That's great. Do I think NASDAQ's going to come back into this low? I don't. This is going to form.
But you think YM will, and then it will create an SMT, and then you'll long. Yes. All right, but
yeah, exactly. So that SMT that we're seeing in here would be called this. So what we'll see next week, and I'll do this actually right now as well, is at the end of the stream tomorrow, or I guess at the end of the day tomorrow, I'll create an alert at the previous week low. And when that previous week low is engaged, this will be called a strength switch. which is just another fancy name for saying the weaker asset, right, is becoming stronger, and the stronger asset, right, is becoming weaker. And I can clearly see that. This asset hit all-time highs. Why is it weaker on the weekly time frame? That's a question mark, right? It should be stronger because it's way above its highs. It's not. It's weaker. So when this SMT forms, I would label that like a strength switch, which is a form of Kraken correlation, or like we said, it's an SMT fill with the gap. Then that's how I would take a positional trade. So this means that as soon as we form a swing point inside of this gap on the daily chart, say for example, Monday opens low, we're gonna have 3 candles. Monday, Tuesday, Wednesday, right? If we form this SMT with the gap, like this, maybe it looks more like this. Okay. On Tuesday, I'll be looking to positionally buy a swing formation inside of this candle, putting my stop loss at that low, which is going to be the SMT fill low, and targeting the all-time high. And this is the type of trade I take regularly. So this is probably like where more than half of my personal account trades come from. It's exactly these types of frameworks on like the weekly chart and also on the monthly chart. When I can identify a trade like this, it's very high probable for my system, simply because I don't have to worry about the intraday volatility as much. I'm essentially profiling the entire weekly candle and saying, hey, I know that we're going to form a low somewhere in here. And this is very high probable because this asset is still, trading to these highs. Well, these assets, obviously, I don't like to long all-time highs. Personally, it's not my favorite thing to do. I don't like to trade to this high here. I always want this high to have something looking left. And you can see there's nothing up here. It's just white space, right? So this is going to be exactly where I can frame a very high probability swing trade, just for Nasdaq to get up to there. So that's my bias for next week, not for tomorrow. For tomorrow, as you can see, based on this analysis, I'll do nothing. I won't trade indices tomorrow. I'll just wait, because the last thing I want to do tomorrow is trade Nasdaq higher in the range, expecting next week to do this. Right? Maybe on like a Tuesday, Wednesday, Monday. I really don't want to be trading tomorrow, towards these highs with that bias in mind. It just wouldn't make much sense. And then of course, where am I going to really be shorting this to? Like you said before I hopped on, you'd be pretty silly to look to trade away from this high back towards this low, right? And that's where me and you have a very similar system of Moss, in the way that everything I'm saying can be described simply as this. Look how close we are to the weekly low on YM. It makes so much sense for next week YM to do this. It makes a lot more sense for Nasdaq to stay in this range. This is the current weekly low on Nasdaq, right? It makes so much sense for us to look for this daily gap to form. So now we did the weekly chart. Nasdaq will form a daily fair value gap that looks like this. Notice how premium it is, so we can flip this around. This is very premium, and this is extremely discount, right? On Monday, I will literally be looking for this daily gap to be hit on Nasdaq. That. While YM runs the weekly low, like that. This is a weekly gap here. This is a daily gap here. When we get those 2 levels hit, I'll look to swing trade the entire week. The next week, I won't be day trading these markets. I'll look to day trade maybe another market and swing trade this market.
I like the overall approach, but it's very, very similar to mine for sure. One thing that I like though is the PSP. Like, thinking about it, it is a very, very smart technical. Because like that inside bar candle, let's say, like I would say, especially when it's an inside bar, because like that inside bar is telling you that you are accumulating basically. And if that full candle, let's say it's a daily bar, fully accumulated, then you know that if you see instant reactions from the low, then it is the manipulation.
Especially when there's a higher time frame gap below it.
Exactly.
Now
you see that the thing that we talk about, like those like the PSP, and like when there is a gap below you and there's also that inside bar. One thing that I do in my own trading is scalp the move from the close to the gap.
Yep.
Just for a quick
that's
scalp,
also a great trade. That's how
Yeah.
you would trade the beginning of the week. Like, for example, next week as a day trader, you'd be looking to trade the open low, then the low to the high. So you can trade both,
Exactly.
because there's two phases of this candle, right? If this weekly candle is going to look like something like this and open up here, okay, then we're going to have one phase, which is the wick being created, and another phase, which is the body being created. So this phase in here you can trade as manipulation of price. And then this phase here, you can trade as expansion of price. Both of them are valid. In fact, both of them are high probability, because you know that the lows and highs of the weekly candle are not going to be made from a random place. Like this and this is where I'd question you said it's very valuable when it's an inside bar. I think it's even more valuable when it's at the point of reversal. So when we have a strength switch PSP, right, that sounds like a lot. When we have a PSP paired with SMT at a range low or high, it gives you very one-sided biases. Look at this. You see how this asset in here takes out the
Yeah,
range?
when it sweeps the low and closes back. Yeah,
Now
of
imagine
course,
if
of
this
course.
candle closes
Of
as an
course.
up close candle and this candle closes as a down
Okay,
close.
then imagine there was a gap above you.
There you go. Then you have then again
then
you
you
can
fall
trade,
then you fall for it.
then you full forward it. Yeah. So typically speaking, what you're saying about that candle close with a key level giving you a direction, it's essentially how I build biases in the market regularly. You can do it all time frames, by the way. It's not mutually exclusive to kind of the weekly chart, daily chart. This is a monthly candle. Okay, look, we have a SMT in a gap. This is an SMT fill right here with the previous candle's low. How does this candle close? Right, with that SMT fill on the daily chart, we can see, or the weekly chart, sorry, we get that PSP. So it doesn't have to be in the same time frame either. You can use a monthly gap and then look for that second cracking correlation on a weekly chart. And just when you blend those time frames together, it actually does help you find what swings are going to hold in the market much more, which is what we were talking about last time. When we look at these large high time frame models, you're going to see the interesting thing. If I show you a quarterly chart, like the swing trade I took this year, it's the same logic, and it's actually quite easy. Like, again, the concepts maybe in isolation are difficult, but when you're applying them over a quarterly chart, it becomes very simple. We're looking at where lows and highs are going to be made for example here. This was in April of last year. You can see we have this obvious retracement back into discount in a bullish market. So we're saying, okay, well, this is a really interesting place to think of a swing. When people are like, I want to start adding stocks, right? Where do I buy? When do I buy my Apple, Nvidia, Amazon, Tesla? When do I actually start loading up on stocks? When I'll do that is when I see something like this form. So you have a retracement into discount. I'm going to look left. I'm going to say, do we have any sort of SMT divergences with any sort of key levels? Well, in here, there's nothing really that clear. All I know is that we have, we're taking out some of these lows, right? We have maybe a small gap here on the Dow, but this is not really interesting to me. Like, nothing is to be said about this. I don't know when that wick's going to form, but I can go down then and say, okay, well, let's take a look at a candle like this. Look at this monthly close. You see how this asset in here, look at the range from the low to the high. Okay. This asset comes into the lows, right? A deep discount and staying weaker, but look how closing the reversal candle, right? With this bearish candle close, and this candle, which comes again into the range, into discount, closes a bullish close. That right there is telling me NASDAQ is stronger for this move. Okay, so this right here, this Kraken correlation that we're seeing right here, right? Okay, so this could be the low on a monthly time frame. When do I want to buy stocks? Well, I want to buy stocks typically when they retrace, not when they're at their all-time highs, and I want to buy them with a solid foundation, to get another 3-month swing out of it, or a couple month, a quarterly swing. When this monthly candle closes, it's as simple as doing something like this. Going into this candle, that's a C2, right? The ones we like to trade. And we don't have to trade it as a reversal candle. Just wait for the V shape. You're going to see this in the lower time frame. Move lower, move higher. Inside of here, there's going to be a fair value gap. And this close here is telling you something about how the market's reacting from this key level. When I buy my stocks or when I take swing trades, I look at that and then I go down to the daily chart. Really simple. Look at this. The next monthly candle is opening up inside of a weekly gap. It's not a weekly gap, it's a daily gap, sorry. It's this daily fair value gap. And all you have to do is wait for a single gap to form and then buy it. So wait for the next monthly candle to form. Wait for a single gap to form like this. You can see it really in here is choppy and then it expands higher. I, again, know what I'm targeting for a swing trade. Either you can buy the monthly close, which is great. buy here, put your stop loss in this range, and you target the high. Or you can do what I do. I just wait. I wait for a single daily gap. So here's the monthly open. Here's the first gap. On a weekly chart. Buy the first gap. What are you going to see? Same thing, Amos, right? SMT with the gap. Buy it. Your stop loss at the low that forms. So in this case, it's going to be that gap divergence. And target the highs. So this is how you can take like swing trades that last, a couple of weeks, right? A couple months even, but they're very high probable because you're just timing when to get involved with these longer term ideas, using the exact same concepts we use for day trading. And that's probably one of the things that has helped me the most offset kind of the variance in day trading is just applying the system I trade to like a monthly chart or a quarterly chart.
Amazing. Yeah. Appreciate you for that explanation. I would say now that you did it with your own chart, it was far simpler. Of course, there is like a few things that it changes, I would say, especially with the exits. But overall, I have the same exact perspective of the chart.
I think we do trade extremely similar. I think the only thing that we do different is our targets.
Yeah, targets.
We filter our swing points a bit different, like how we define a CT. And then we also...
That's also a big thing. It's like I choose to have sloppier entries than you because I know that sometimes there's no SMTs, or even if we retrace deeper within the range, the likelihood of us still winning that trade is still very likely,
Especially with a one-to-one R system.
Yeah, exactly. Right? Especially with the one-to-one. So like I still position myself in such a way where the framework already works so well that even if I'm sloppy, I'm just opting for a system that has a higher frequency to just snipe them. So
there's nothing wrong with that, by the way. That's again, you're literally playing the game of prop very well.
Exactly.
What is maximized by prop firm trading.
Yeah. So guys, we're gonna host giveaways tonight, of course. I was literally just trying to go fast because I need to go to the bathroom real quick. But the first slide goal, guys, 300 likes, and then after that, we're just gonna go up 100 for another account. Okay. So I'm gonna go back. Gonna come back in like 30 seconds, and so 300 likes for the first like goal, and hopefully I'll be able to take a trade within this range. I really want to see that daily high being taken out on NQ within this 8 p.m. open. Coming back.
I'll share my chart as well and just show them what Amos is looking at. He's looking at this high. Let me see if I can look at some of the comments and answer a question or two. Afiz, is it okay to place much emphasis on Dow Jones, SMT rather than ES and YM? So, like I said this last time, but when we're looking at three assets, the ES, NASDAQ, and the YM, Dow Jones and the NASDAQ are likely to make those divergences at extremes. So typically speaking, you can use this actually. This is kind of like a rule of thumb. When NQ is strongest, YM is typically weakest. Okay. When YM is strongest, NQ is typically weakest. So this is where you see sometimes you'll form, market opens that look like this. NASDAQ will go in one direction and Dow will go in the opposite direction. This is when they kind of trade in opposite directions, right? Now, to these two assets, there's always a middle asset. So ES is typically the middle asset between NQ and YM. So that means that if we're going to take out, all-time highs or something like this, right? If YM takes out these all-time highs first, right? Like, what day did we take this out on? You can see in this case, YM and ES take it out at the same time. Typically, you'll see that it would be YM first, right? ES will be closer to the high than NASDAQ will because YM is strongest, and vice versa. So if we're taking out a low and NASDAQ is like the strongest to the downside, you'll typically see, like we did last week, or last month, sorry. Let's look at this low down here. The same thing. We have this swing point in the market. look at the difference in strength, okay, guys? Really, really simple to see it when you look at it like this. So here, NASDAQ is the weakest. In relation to NASDAQ, you can see that YM is much stronger. Look how far away from this low, right, that YM is. Now, ES is always going to be considered a middle asset to these two. So if this asset is the strongest to the downside, that means that this asset is going to be the strongest to the upside. It's going to be much stronger than YM or than NASDAQ. And ES will be the middle asset to both of these. So when we use that logic, that's how we can typically look at the strength. It's just simple like this. When NQ is strongest, YM is weakest. YM is strongest, NQ is typically weakest, and ES is typically in between both of these assets in the range. That's how you can choose which asset you want to trade. That answers the question. Which is why I typically only trade NASDAQ and YM. You'll see about 80 to 90% of my trades are NASDAQ or YM, and 10% of my trades are ES, because it's usually more of a middle asset in relation to these two. So it's not close to highs and lows that I can trade to. Yeah, but there is times where you want to trade ES, and we can get into that another time.
All right, guys.
Did we hit our like goal yet?
What you say?
Did we hit our like goal yet?
No, that's what I was gonna say. I was like, you guys, that's pretty weak right now. 174. Come on, guys. We need 300 likes. That's the first like goal, and then it's gonna be easier. First one is, we need your help. So with 300 likes, we're gonna do a giveaway. All right. So
someone said strongest and weakest should be rephrased to leading and lagging. I completely agree, yeah. But that terminology is not familiar to everyone. If I say leading or lagging asset, but you're right. That's typically how we refer to them. There's a asset that hits a high, that's going to be the leading asset. The assets that haven't hit that high or low are the lagging assets or the middle asset. Yeah, you're right. You're looking for previous day high on NASDAQ, right?
Yeah. I would want us to see a break from that 7 p.m. to 8 p.m. 1 hour candle, breaking above, like, I would say this opening price right here. And once we have it, I'll use the 8 p.m. open as fuel to drive us back. I would say like the 6 p.m. candle is usually just an accumulation candle. It's very rare that we'll see like very good setups out of those. Sometimes there's even fake outs.
Unless it opens up into a 4-hour gap, then you get those one-sided Asia expansion. Also, when 2 p.m. reverses, 6 p.m. can expand as well. So if you see like FOMC days, where the low or high of day is made very late in the daily candle the previous day, sometimes we just get Asia opening and ripping in one direction.
Yeah.
But that's, again, it's rare. You need very specific framework usually to trade Asia. Like you can see on metals here, we're opening up near this 4-hour gap. It's actually ideal. Like that means that this 10 p.m. candle or the 6 p.m. candle can form that swing point, and London and New York could expand lower. But if you can get involved in like Asia at 10 p.m. or 6 p.m. ideally, if it comes into here, then you actually get to capture this entire part of the daily candle, which is the body.
Yeah.
But it has to be a 4-hour gap for my model, at least. If it's not a 4-hour gap, then I have to just wait.
Many likes now. Let's see. 232. Yeah, that's not bad. Come on, guys.
That's not bad, actually.
Yeah. If you guys have any questions in the chat, make sure to type them. It could be technicals. It could be anything. Personal also. Always. I also love to respond to personal questions for sure. Not too personal. Yeah, sometimes you guys get too personal, like asking for my shoe size and what I ate yesterday. Sometimes it'd be weird, but if you're 27, right? 27.
Cool. I'm turning 27 in like a month.
Okay, you're turning 27. Okay.
Very 27, yeah.
So you're what? You're 2000.
1999.
1999. Okay.
Yeah, I'm born late in the year though.
Damn, Unk.
Yeah, I know. You're 20. You're 25, 24,
23.
Oh damn! Yeah, I am Monk.
Yeah, I just turned 23, so I was like, I'm 2003.
Yeah, I got into trading like late. Like I think I started trading when I was like 20. These days people are starting when they're like 16, 15. It
Oh
makes me
yeah,
jealous. I'm like, yeah, that's you guys definitely. It's definitely got like 5 years on me from when I even started, and then you see them; they're all profitable by age 20, and you're like, makes sense. Doing it since you were
yeah.
14, 15.
I think yeah, it's at this point, you know, it's really about luck. You know, that's the luck aspect. I remember we had like a conversation. I don't know if you guys remember in the chat. Let me know if you remember, but there was someone in the chat telling me that there was no such thing as luck. And I disagreed with them because I was talking with Terrence being the other host during Asia, and he was a professional football player, American football player, for like you know, like a real professional. So then I was asking him like, what is the level of luck that is required for you to, you know, be pro? And he was like, he was telling me that there was quite some, depending on if someone was willing to give you a shot or not. But it's exactly the same thing. Us, let's say for me, I started when I was 18. I'm currently 23, but like this is purely out of luck. You know, I was able to I was born in an area where in an era where we had a lot of opportunities. Everything was already built out for us. You know, we had
That's
journaling
true.
softwares, prop
Yeah,
firms, backtesting softwares. You know, and also we had the right information available to us at the right time when, you know, we were young too. So like, as someone who's older, you know, it's I would say, of course, it's really not about it's really about timing. I would say you
for
you
sure. Yeah, I
definitely
think
lived
the
in a
first like
different
couple
era,
of
but
years,
that this is purely out of luck. Like I
the
was
first couple of years
just
I spent trading, I just don't think there was a lot of like great trading information in the space. Like I was like
there
in
wasn't there
I
actually
was in like
wasn't.
ICT's charter in like 2019, 2020, and like that was a Telegram group where he would essentially just like post rants. And it really didn't really evolve, I think, and mature until 2022-ish, 2021, when he started creating that YouTube content that was way more accessible. And even dropping some like that 2016 core mentorship stuff, I think a lot of us learned from that. But back then it was like you join like an MLM kind of scammy service. You like learn how to trade options and lose all your money doing that by taking some signal. So yeah, I think these days it's, I mean we both have students we teach, people who like watch our trading education stuff. I think when they watch a single source of truth from one person these days, then they have all the infrastructure around them too. They have the prop firms, the journaling software, the free education, right? Like even Twitter is way more like established these days. Back then, it was just like some guy
Yeah,
would post an SPX entry that he's taking, and you'd be like, "How is he doing that?"
yeah.
Yeah,
I think
I think it's cool though. It's mainstream
luck is a
now.
factor for sure.
The fact that
Yeah.
it's mainstream, I think, also makes it harder because there's just so much out there too that you really have to be very like deliberate with where you put your effort, or else you can just chase systems like there's 100. Like if you go on YouTube and look up trading strategy, nowadays more than ever, there's like more than ever, right? So
I think you know what, like nowadays, like when you start trading, you you really focus on technicals, of course, and it's very important. You need to have
yeah,
edge, and in my opinion, that's the first thing, of course. But with all the information available online currently, there is a way for you to be profitable so fast because of you being able to understand the business approach of
yeah,
props
100%.
before actually even getting to having the best edge possible. You could make some decent money, some quite some payouts from understanding the power of like risk to reward and frequency and the
Sure,
right
yeah,
account size for you with your initial investment that you want to you want to put, you know. So like in my opinion, yeah, of course, like the in terms of the speed that you can become profitable nowadays, it's crazy. But
it's definitely quicker. I
it's
think there's less barriers. I think in terms of education, also just there's less barriers in terms of financing the learning curve. Back then, it was like throwing money into personal accounts and seeing how that worked, and usually losing like your entire paycheck in like a couple days. Nowadays, you can like actually buy prop firm challenges and whatnot, which really offset kind of how expensive it is to learn.
Yeah.
I think I would have saved a lot of money if I was using prop firms as opposed to personal accounts, you know, circa 2020. But back then there wasn't prop firms, right? There wasn't anything you could do about it. So you just
100%.
I mean, think about how much money you probably saved, Moss, by blowing prop firm accounts and not personal accounts.
Yeah. Oh my god.
I think about that too. Like even when I have students and they're like, "Yeah, I'm having a terrible month. I lost like, 2K worth of challenges." I'm like, you know what? Like for a really bad month, all thing considered, that in another life that was like multiple paychecks of yours you put all into like your personal account and you just dusted it, right? So it's yeah, there's something to be said about just like it keeps you in the game a lot longer. You see people who survive a lot longer because they kind of stretch out the time it takes them to learn, and they stay with skin in the game, which is cool.
It's also like we say it's the time that it has never been easier to be profitable, but also like as in the current era that we live, it's also very hard because of the amount of distraction that we have in our lives. Like everything is so instant gratification. You want to watch a movie, you click one button and you watch it. You want something, you want food, you order on Uber and it comes in 30 minutes. Like everything is just, you want it, you get it. You want it, you get it. But in something like trading, we tend to like be so aggressive right from the start, thinking that we know it all, when it's like such a different field than a lot of different businesses that are available online. I would say it's pretty much.
I think you're right. Yeah, 100%. Trading is one of those things that it really is like a longevity game. I think if you can survive for long enough, if you can stay liquid for long enough to keep putting a meaningful amount of risk into the market so that you care about it, while not losing so much that you can't stomach losing more and then you leave, that's the sweet spot, right? I really do think it's impossible to not pay the market tuition to some extent. You either, pay for education through a mentor or some course or some, system, but you also have to, I think, pay your dues to the market. These days, I think you can just stretch that, right? And like, you can stay in the game long enough to realize that it was never going to be your strategy that saved you. It was never going to be the shiny PSP or whatever, like the next concept. It was always going to be just your ability to find something and then stick to it. And I really do think I've seen a lot more profitable traders in the past 3 years than in the past 7 years. There's a lot of people I started with. Like I started, social media in 2022. I remember I was like, I went on like T Trades' channel and I did like a little Q&A talk with him on some part of my model. And the people who I, was on that T Talk with before and after, so he like put us in a schedule. And the reason why I remember this is because I was after like 3 guys who were big names in the space at the time. And if I said you their names now, you'd be like, who are those guys? Like, I don't know who they are, right? So back then it was like there was so many more people who would kind of just come burn bright for a few years and then you just never hear about them again. And I think these days you see people actually stick around for longer. And more people are trading than ever, but I think more people are staying in trading longer than ever. And that goes for even like the educators and stuff too. It's like, I think people are like, the trading is becoming more and more like long-term than it was back in the day where it was like, let me try and like flip this account or make a shit ton of money and then, eventually crash out and not trade anymore. Now you're seeing people make full careers out of it, right? Like, I think it's way more sustainable in my opinion. I see the same people.
You know what I think overall about like the mentors and this and that? It's like even me, let's say, I show my approach, let's say online, but I truly believe that if you have time, if you have a lot of time in your day to invest into trading, and you also don't have a lot of responsibilities in your life, I truly think that you don't need a mentor and you need to go on your own, because there's this quote that says, when you cut your own wood, it warms you twice. Okay, which means that you become another person completely by doing the work on your own. I would say for me, coming from someone like me who did not have a mentor, then I think the reason why I'm acting, let's say I'm so um, patient with my model, or I would say like I am very, very technical with my approach, is because of that. Is because I went my own way, you know?
For sure.
But for someone, let's say, who is older and doesn't have a lot of time to spend in the charts, then a mentor is quite required. I would say it's like impossible for you to put in the amount of time that someone who's younger than you or someone who has no responsibilities is gonna put to validate the information. You know, so like,
Yeah, I think it's a balancing act, right? It's like
mhm,
eventually, like I said, I think you have to pay your dues to the market. You have to kind of like, cut your own skin, touch that, stovetop that's hot, and that hot stovetop is the market. And you have to make those mistakes to know what you can't do and continue to do if you want to do this long term. I actually was fortunate enough to have a really good mentor eventually. So I kind of did both, right? I learned from the online approach. Like I actually ended up buying someone's ICT charter like mentorship. Like I actually wasn't accepted as a student. I didn't even know it was a thing. But people at the time were like selling it. You could like buy access to their Telegram or whatever. So I did the whole like learning from videos, trying to figure it out. And then there was one guy named the MMXM trader, and he was the first person in like the whole Twitter sphere I ever actually spoke to. And like he was the first person I would ever call my mentor, and he really showed me like that speaking with someone about trading had a lot more impact than just simply talking about models or learning from a course. So I like studied obviously trading models, but he was the one guy who would like hold me accountable and be like, what was that bullshit you did today? Like he was the only person at the time who would actually hold me accountable. I think that changed. I was very lucky that he actually gave a damn as a mentor. Like sure, like I paid him money and whatnot, but in my mind it was like that he actually gave a damn about how I was doing kind of on a daily basis or a weekly basis. And for me, that kind of clicked because I guess I was used to the structure of like job, a manager, a boss, right? Like even in school, I was always like very like following the right path with like a TA or a professor. I don't know. For me, I needed that authority, and trading, I couldn't do it for myself. I can candidly say if I didn't have that mentor, I probably would have been a lot worse off. But it was more or less not the technicals. It was the person who would sit down with me, twice a week and just say, "Hey, man, like you have a system and you're not trading it."
mhm.
He was also the guy who put like locks on my trading accounts. Like he'd like, you have a maximum lock. Here's a password for cold turkey to block you out. It was stuff that just like actually forced me to have accountability. I think that's my take on like why I think accountability is important for some people, because it's easy to sit at home by yourself and click buttons without telling anybody. In the same way that it'd be very, very easy to be a gambler in your own house when no one's around. But if you have to go out and do it in front of someone, typically that friction actually
Yeah,
stops you from
that's a
being
good,
so egregious. And for me,
yeah.
it just turned my trading into something that was very me alone, and very detrimental to my financial and mental welfare. To like, there is someone I'm gonna have to answer to at the end of the week, at the end of the month, at the end of the day, and I think that just shaped me out. So I was a little bit, no, I was a little bit just scared of doing the same things again and again and again, and having this guy be like, I don't want to I don't want to mentor you anymore because you're not making any progress, right? So it was external motivation for me.
I like the metaphor of like you wouldn't gamble if it was in front of someone, but you would gamble like your accounts if you're alone and you have no one to be accountable to. I really like it.
Well,
But
if you think about it, if you ever have gambled, right? Gambling
yeah,
typically is a very isolating thing when you do it, when you do it like habitually. But when you're out with your friends at the casino, maybe for a weekend, versus when you're sitting at home sports gambling or even revenge trading or betting online by yourself, it's a very different experience, right? There's kind of that level of shame you feel. And I'm not saying that a mentor should shame you. I don't think that's necessarily the message I'm trying to spread. It's more like accountability from someone is really important in all aspects of your life, right? Whether it's trading or fitness or anything you do, right? And that's why generally most things in life have accountability built into them. Like,
mhm.
you go to school and you have accountability in that entire structure, right? You have a job, you have a manager, you have a boss. I think trading is one of those things that's become very like an individual sport, and yeah,
That's
it's
true.
people do some shameful things in their day trading by themselves, right?
Yeah, 100%. What are you I was thinking about it because someone asked me to go to the casino this weekend. But what are you gonna do this weekend, Afiz? Do you have
This
anything
weekend,
planned?
I
Yeah.
am going to see my parents. They're coming in from Vancouver Island to Vancouver, so take them out for dinner. Maybe hang out with them and the dog, and then probably just see some friends on Saturday. And then I have a meeting on Sunday with my team, so that's gonna be like all day. So Friday, Saturday, hang out with family. You?
Really, I have like a birthday party on Saturday, but nothing planned for Sunday and Friday night. So we'll see. Probably just relaxing. But you said
Yeah,
you would go to the restaurant. So like, what's your favorite meal all time? Like if you had one more meal to eat before you die, what would it be?
it's got to be steak, bro. Like a really good steak. You just can't beat it.
Okay, I guess we're the same.
Yeah, yeah. There's so many good foods. Um, I was in Mexico for a month in February, and the food is amazing in Mexico. But one thing I missed a lot was just I don't know, like an American steak, like just a steakhouse. They never, I guess there wasn't like a steakhouse I went to for the entire month. And I'm like, it's the longest I've been without going to a steakhouse, and yeah, I missed it.
Okay. What kind of steak? What's the cut of that steak?
I actually like it. If you've ever had Australian like Wagyu, it's very similar like Japanese A5. It's just a little bit less like rich. It's really good. It's a little bit more like
Fatty, no?
no protein based and less like fatty. It's a little bit leaner than like the
Ah,
super
okay, it's
marble
leaner. Okay.
fatty. Because that Japanese Wagyu, I can only have like a little bit, and then
Yeah, that's the
I'm
thing.
full. Yeah,
Wagyu
I'm
is like
stuffed.
it's very it's heavy.
It's super heavy. I recommend though if you ever try like the like Australian Wagyu. It's a mixture, I guess. I don't know why I don't know how actually they grade like different Wagyu cuts. I'm no expert, but I did find it just tastes the best. Like it's also cheaper by the way because it's not as marbled or fatty as the Japanese one, but I think it tastes better.
Yeah, same for me. Number one steak for sure.
Yeah, that would
Uh,
be your last meal.
yeah, I told him like we had this conversation multiple times in this segment. I was like, if I had one last meal to eat, it would be a big steak, a lobster mac and cheese, and what else? And fries,
Lobster mac and
and then
cheese.
kill me after that. You
That's
can
your
kill
cheat.
me after that.
That's your cheat meal for like
I'm
the
good.
whole week, and then you're done. Yeah. There's a really good steakhouse I went to eat last night actually in Vancouver. It's called Eliza. Uh, Fantastic. I was in Toronto for a long time, and obviously there's lots of good like restaurants in Toronto. But I moved to Vancouver, and I realized like there's some really good restaurants here that I just like I've never tried because I grew up here and I never went out to eat when I was like younger.
Mm.
I'd always eat at home, and I was like, damn. As a foodie, Vancouver's not a bad city actually.
Someone is asking, Amas, did you see my question about Asia Open? Does it have more frequent quick pop-ups than any other session open? I wonder what the percentage are. Okay, I'll tell you. It's like for me, how I view it is, let's say we had this daily candle. The strength of the closure of the previous bar is extremely important to know if I should be aggressive or not during the Asia Open. If that wick right here was, let's say we closed all the way back to 81 and we had a 215 point up wick, I would not try to be aggressive and predict that price would reach the daily high very aggressively. The distance from where we are right now to the previous daily high is so close that if we see strength towards that, then I'd be aggressive. So right now, in my opinion, if we do have an hourly candle, because time frame alignment is very important for me. If I have a daily target, a daily framework, then the hourly is my entry. If I have a 4-hour target, 4-hour framework, then the 15-minute is my entry. If it's an hourly, then it's a 5 entry. And if it's a 15-minute framework, I would have a 1-minute entry. This is the same thing for everything. And if let's say I have a 30-minute framework, it would be a 2 to 3-minute entry. Always the same. So here, if I have a daily target, I know I'm very close to that daily high, and I want to see us, I want us to use the catalyst, which is 8 p.m. open, Tokyo open, as the driver to that daily high. Then I would want to see a closure towards that high. So to respond to your question, the strength of the previous day's close is really what's going to give me the confidence to be aggressive right at the open, or be very cautious and take a quick scalp rather than letting it go towards the daily high or low. Okay, so the distance between the draw and where you are is very important. The closer you are to a high or a low, the more chances you have of sweeping it. It's always how I view it. If you come all the way here and you have a strong closure on the hourly, then the likelihood of you bumping above that internal high and using it as stops to run back towards this high is incredibly high. I hope it responds to your question, my brother. Teammate Alex, how are you doing, bro? Damn. I have Alex in the chat. What's up, bro? You still have to make me a Tradeify TV music. You know, I need that. You know, I went on his stream, and they were playing bangers, but I think AI made it, or his friend made it. It's like a rap song, but like
it wasn't copyright.
Yeah, it wasn't copyrighted, and it was like talking about him and his strategy and trading overall. So I was like, damn, I swear I was just vibing for like 2 hours on that beat.
Pretty cool.
I had it, and like I was editing videos. So like I need that, Alex, if you have it. We need those because that would bump
those
that
trap
heater.
house beats. Yeah, those Tradeify TV trap house beats.
Yeah, it would go hard. Unless you only take CRT setups, no, because if you only wait for those, then your frequency of trades is very low, and you would need to go down in such a lower time frame. And the lower the time frame, the less valuable the candlestick pattern becomes.
Very true.
The more fake outs there can be, because the market, the lower the time frame, the more random spikes you can encounter. The more, okay, someone gets out of a trade with heavy size, then price spikes, sweeps the high, and then goes to your target. Those random spikes in price and also manipulations, I would say, on the lower time frames you're very inclined to take in those kind of manipulations if you're trading off of a 15-second time frame, or a 5-minute entry, not entry but 5-minute framework.
There's way more variance on those lower time frames, right? Like the volatility, especially for indices, for example.
Yeah, so many like
volatility sessions. Yeah,
it's very navigating those lower time frames is very hard. That's why when I go to lower time frames, I rather trade the PM session than like the AM session. Usually, like I start my live sessions like at 10:40ish. Because like it's at around 10:30, around like 10 a.m. Like you cannot necessarily rely so much on those lower time frames to build a framework for yourself. It's really more about the entry. I always frame, like how I do it is I read the higher time frame chart. I always say this, but I take a look at the daily or the hourly chart, especially the hourly. The hourly is my most used chart to get the bias, but I look at the hourly chart and I treat it exactly like if it was a 1 minute. And I'm like, okay, where is the next candle going to close, going to expand? If I don't know where it's going to close or expand, I am not taking a trade within that next hour. But if I have very strong conviction in the way that it's going to close, then I remain, let's say, bearish or bullish for the remaining of that hour. And I'm fading those lower time frame shifts in market structure to my advantage when I see squeezes for quick scalps. So it's pretty much what I do.
If gold can come into that 4 hour gap, I'll probably look to trade during probably 10 p.m. like the next 4 hour candle. It'd be decent actually. It'd be decent. You don't
On
trade
gold?
metals at all, do you?
So we're pulling back to the 4 hour, right? Okay.
Yeah. We have like a pretty large, it'd be a pretty large wick for this candle to reverse, but next candle can form a swing inside there on the 4 hour.
Mm-hmm.
It'd be nice not having to trade New York. New York hasn't been friendly.
Yeah, a lot of big distributions during the overnight session, which leads New York to be very, very choppy.
I mean,
But
yeah, I've been getting absolutely wrecked. I'm not gonna be honest. It's like one of my worst. I think it's one of my worst starts to a month, dude.
yeah, I mean that's also one thing about like having a. I would guess you have a higher risk to reward, right? Sometimes
Yeah, yeah,
you go for exactly. So like in those kind of moments, like when you have a higher risk to reward, sometimes there is going to be market conditions where since
for
you're
sure.
looking for expansions, like the price is just not going to go anywhere, so you just need to take your losses, and that I would say could be challenging if you don't have like if you did not build an identity for yourself before of like, okay, I've made that amount of money before, I have this amount of data, I don't care about what's happening right now. I'm gonna eventually make back that money once the market starts to move. And I think
For sure. Like I've been
yeah,
round tripping a lot of like today, for example. If you and I took the same silver trade today, which I took, you would have made 1 R. I round tripped it and lost an R. Right? I'm targeting the external high. Like it gave 1 R. I
yeah,
think I've taken this week. I took 3 losses, and 2 of those losses went up like over 1.5 R. Today went up 1 R, and I'm like just thinking about it. It's like yeah, like this system technically for a 1 to 1 R, it's a great week. Just the way I trade the system, not a good week. You just gotta be able to sit
yeah,
with that. Like for me, it's sometimes about stomaching that. It's like, yeah, well, I'm not gonna change my rules now. Obviously, I can't do that without data to support that. But individual weeks can make you think about it for sure. I'm sure you have the
yeah,
same thing. Like some weeks you're like, man, I should have held the runner. I should have held for these crazy expansions.
yeah.
It's a good point you make though about like you need to have a good identity outside of trading as well. Like it's very easy, I think, if you associate your entire value based on not just your P&L, but based on your performance as a trader, like even simple things like not allowing yourself to make mistakes. Like it's actually been very interesting. Like I like live trades, I'm sure you do, and like when I lose in front of people, it's always worth emphasizing that that adds a layer of pressure and like expectancy of your performance that sometimes can get in your own head. And sometimes I have to remind myself, I'm like, there's nothing wrong with also just like making mistakes as a trader. I know like these days it seems like very easy to like patronize or be critical with yourself when you do mess up, but I view trading like I view sport, man. I view trading like I view business, sport, and life. It's like there is an element to trading that is fundamentally human, and you have to be compassionate with yourself. Like it's absolutely okay to say like, oh, I completely messed up. Like
Yeah.
it was all mechanical and I messed up the entry, or man, I just saw this so wrong, or you know what, like I'm not on my game today. I'm not on my game this week. And I think when you're more compassionate with the fact that you're allowed as a human just to like forget my language, just like fuck up. You're allowed to like, go through a bad spell of trading. I think your identity doesn't get like attacked so hard by like losing streaks or drawdowns. And
Yeah.
also you don't get a huge ego from, large winning streaks and periods where you're, building equity and getting lots of payouts. And it's just, yeah, I think you come from sports and you probably understand it best. Like some days like when you're on the pitch, bro, like playing football, you're just like on your game. Like every
Yeah.
pass is good, every touch is good. And then some days it's like, man, why am I like messing up this touch? Like I shouldn't be doing that. And people don't view trading like that. People like even ourselves, we're so critical of ourselves. We're like, oh, there's no reason why I should make that mistake. How did I like not see that? And I used to be like that, like very much so. I was like a perfectionist to the point where like I would mess up in trading, and then I'd spend the whole day like ruminating on that. Like, dude, how could you take that shitty trade? Like, what am I doing? And now these days, I'm like, dude, like, you're allowed to make mistakes, and you know what? You can still be profitable. There's
Yeah.
perfection and profitability are not the same things in trading.
Yeah.
You can make lots of mistakes. You can mess up as the human operator for your mechanical system. You can miss a trade. You can manage it poorly, and you can do the wrong things, and you can still end the month green. And I think when you
100%.
realize that, it's like super powerful, right?
Yeah. Yeah, that was well said, bro. Absolutely. I totally agree. For me, it's just detaching myself from like I just try to not entertain any negative thoughts in my mind, you know. How I view trading in general is like I take what the market gives me. I know I'm going to make mistakes. I know sometimes I am going to be late in a trade. I will feel emotions. I will feel like sometimes I take the worst possible decisions. But if I am doing in the vast majority of the time, I'm respecting my plan, I'm respecting my rules, I will eventually see profitability, you know. So I like taking what the market gives you is really like the that portion is like I when I enter a trade, it's crazy to say, but if I win, I'm like it's just a random distribution, and if I lose, it's also the random distribution. I am just taking whatever, and I'm
Yeah,
taking the setup over and over again. And I know there's going to be some months where I'm telling you, I end the month and I'm down 1R. And it
yeah.
happened to me this year also in March. I'm down 1R on the month. And I'm like, did I truly make a mistake? No, I executed my plan perfectly. And that's
That's
the thing,
impressive.
though.
To
It's
not
like,
have no months where you're making a mistake is like very impressive, right? That's
yeah,
like
for sure.
that's
Exactly.
exactly like the highest performance of trading, I think, is
But even
minimizing
like
time.
that's the thing though, it's like the PNL in reality is not necessarily a good indicator of if you're doing good or not. You know, if you're
Never,
doing
right?
good or bad.
It's entirely stochastic. I think what you're describing is what you'd make a fantastic gambler. Like if you learned how to play like, poker or something like that mentality. And there's at major, so when I was in college, I did like a degree in engineering, but also business. And I did an internship in like investment banking, so like sales and trading. And it's very funny because a lot of, the psychology element for new sales and trading or new kind of investment banking associates who are working with, not just deals, but also in the trading side of the bank as well, is they make a lot of the traders take classes or learn how to play poker at a very high level. And I always thought that was interesting, like seeing, corporate executives talking to interns about, a poker night that they're having that is taking very seriously because that like separates the good interns from the bad interns. I'm like, that
Yeah, I
poker,
saw
like, what do
that.
you
I
mean?
saw that
And
from
it's fairly interesting if you look at like a lot of these banks, investment banks, and their traders. They make a lot of their associates, learn the game of poker to a very high level. They have like a coach. They go to sessions like quite twice or three times a week, and they like enter professional poker like engagements as a firm. And you're like, this doesn't make much sense because that's gambling. And then you think about it, and they're really teaching their young associates to think extremely stochastically. Like the distribution of wins and losses is random, but the probabilistic outcome of a high expectancy strategy is almost certain, right? And when you play poker with, perfect strategy, irrespective of your variance, you should be able to make money. That's why you can make a career out of this. You just have to play enough hands in the right environments, and you have to stay in the game. And they make a big point to emphasize, which I found was really cool because it really lends to trading, I think, like almost perfectly, of understanding that you are just trading. You're never trading a model. You're trading a stochastic variant of a model, meaning some months it will be that model that you back tested and you know very well will overperform. And we tend to kind of neglect that as something that's also, bad for our psychology, because it really is when we have these months that are gross overperformances. Like, for example, last month, my model overperformed. Strictly it did.
mhm.
I
Yeah.
rarely have months that I perform that well in terms of like average RR return over the month. Now this month I'm clearly underperforming, but being able to kind of balance the two and just think like I can't think of a month, I can't even think of 3 months, I have to think of a year of data is really interesting. Because if more traders did that, like we talked about on Tuesday, I think that the psychology of trading would more or less kind of collapse to just like, do you have a system? Are you going
Mhm.
to hit when your system shows itself? And are you gonna be able to take 100 trades without ever changing the system? If you play
Hmm.
poker, you're in a good position to be like, yeah, I do that all the time. Like
I
people who
love
play
that.
thousands of hands of poker, they're like, oh yeah, like I know for a fact that I can have everything going for me, and I can just go through a slump, right? Or I can just go through a series of hands where I'm just winning every hand, whether through it's the cards or my bluffing or whatever. They're just overperforming, right? So pretty cool. I
Yeah.
never really got into like gambling or like playing like card games really, but I do know that a lot of really good traders are very good gamblers for that reason because they treat gambling like a math game and not
Hmm.
a mental game.
Yeah. 100%. But the point that you just said is very like it's very important because I think a lot of the psychological mistakes that people will make is due to not necessarily understanding that, not necessarily having the awareness of that, the statistics behind those, the fact that it's randomly distributed, and exactly, if you keep playing enough hands, then you should see your edge playing out. It's exactly like a casino. They probably only have an edge of like 2%, but
Yeah,
how do they win? Number one, risk of ruin, people full porting and being back to zero. If you're back to zero, then your edge is over. You don't have any expected value. You don't have any money to play with. Number one. Number two, they only have 3%. So if they only have 3% and people play enough hands, then they win. That's pretty much the same thing. So you can't put yourself in a situation where you can't, let's say in trading, if you have an edge, then you can't put yourself in a situation where you will hit rock like zero, rock bottom, where you don't have any money to invest in the first place, or
yes.
you're down too much. So now you carry those emotions within your next trade and your next trade and your next trade,
Yep.
and you need to play enough hands again to see your real edge play out. So again, it comes back to what I said in the beginning. I said, for me, with my approach, the reason why I trade a 1-to-1 is because I found that it has the lowest risk of ruin, meaning that the amount of back-to-back trades that I can take in a row in a span of 100 trades is very, very slim. Okay,
Sure. Yeah.
maybe 4 to 5, maybe 6 on 100 trade span, meaning that I chose to over risk on my trades, meaning that I am risking a fifth of my drawdown. Because if I'm not
Yeah,
risking a fifth of my drawdown, I'm letting money on the table. Basically,
I see.
Kelly criterion, if you know about it. But
Yeah.
to,
Yeah,
to
you're maximizing you're
exactly
maximizing your Kelly criterion, and you're using risk of ruin as the function of the value
100%.
of the prop firm,
And
not of
then
the
and
actual
then
equity.
and then
Yeah.
like what's happening in my mind is, okay, I am over leveraged in my trades. That's what I say to my mind. I am over leveraged, but I have a 1-to-1 risk to reward, meaning that I have a low risk of ruin. This has slight chances of actually happening. But then I'm telling myself, okay, I am taking the side of I am going to be rewarded for my next 10 trades. Okay, because if I'm over leveraged, uh, you know, usually within 10 trades, you either decimate the account or get the payout. But then you ask yourself, okay, that 10 trades that you're going to take, is that a big enough sample size to see your real edge, the real statistic of your edge? The answer is no.
It's not, and
So
also you have to think about
so
the fact of
then
the matter is like your risk of ruin is the account being liquidated, but the investment of the account isn't $2,000. It's actually $100, for example, for a funded account or whatnot. So when you're
yeah,
actually maximizing your payoff, if you were like what you're describing, by the way, is an extremely, extremely logical way to trade prop firms. Um, and I think that my model actually favors much better the approach
live
of
account.
scaling and compounding a personal account,
Yeah,
because I do
100%.
go for exaggerated risk to rewards. And like I said, I'll round trip, a whole lot of trades, and I'm okay with that. But when you are gamifying kind of just the pure mathematics of prop scaling and expectancy, you're right. Like it's not just simple Kelly criterion, like the probabilities and your risk of ruin. It's also the time value of money, the cost of the account itself, and everything you said today. I remember when
Opportunity
I first
cost.
hopped in, you were like, yeah, like I'm okay with hitting like a bigger, like taking more losses or blowing more accounts to like maximize the time I'm trading funded accounts. It requires a sophistication of what you're actually doing, understanding of what your edge is to actually be able to say that, because most people don't see it like that.
Yeah,
But you
100%.
really are just playing the game. Like it's a numbers game, right?
100%. 100%. 1000%. What's up, Lumi? How you doing? The Russian queen in the chat. Privet, privet. Oh shit. Clicked on the wrong button. My fault, bro. I was looking at the comment on hide user. Okay, shit. You're good, you're good. Okay, let's talk about the chart right now. What we're seeing this 8 p.m. candle sweeping the previous candle's high, closing back within the range. We are having terrible opening candles here within the last 2 days. We are stuck in a 40-point range. The opening candle, I would think, will be bigger than 40 handles. So 8 p.m. will open and we'll probably sweep the high and the low of that range. That's pretty much what's gonna happen. It's not a one directional move, but within this current action, I would say there's a bigger likelihood of us reaching 185 if we're below the opening price of that hourly bar. Am I very confident in that play? I would say, yeah, I am confident in the fact that it's going to open up lower, back towards 185. So I'm going to take the trade if I can see an entry above like 200, 3203 here. I will take the short. But I'll wait because it could flip quickly. What's up, Joey? Joey Morgan in the chat. How you doing, brother? I just need more Russian lessons. Yeah, I agree.
know your one. You know your privet, and that's it.
Yeah, privet, privet, как дела, da.
Oh, there we go. That's 3. There we go. 3.
Меня 23 года. I'm good. I'm not that bad.
Okay, that was more than I thought.
You see, like I have game.
I was trying to call you out for knowing one word.
Nah.
You dropped like 7 on my ass.
Spasibo. Yeah, I definitely know a lot. Yeah, Lumi's been teaching me, but yeah, everyone's here. You guys just join us at that point. Just join the
5 people on stream.
Just join the link. Let's see if I can take a trade here, guys. Those trades right at the open, they've been working out amazing.
You like that, that volatility we open at 8, yeah?
Yeah. I like it. It's a quick scalp, though.
If he's come to Indonesia, I'd love to. Bali is on my bucket list. I'm probably going to come in December. I'm taking my family to Vietnam, so I'm thinking of doing Bali after. That'd be really cool. Or whereabouts in Indonesia do you recommend I go besides Bali? I feel like that's obviously like the most popular place to go.
You currently have 306 likes. Okay, for the second like goal, guys, we're gonna do 400. Third like goal, 500. And fifth like goal, wait, first, second, third, no, fourth. So third is 500 and fourth is 600. By the way, guys, yesterday I gave you guys a fourth account when I saw the like goals. The like goal was not reached. So you guys rugged me. Nice. You guys rugged me on the last, on God. Or it's either we reached it and then people disliked after, or like took away their like. If you did that, bro.
Ross wasn't that nice on Tuesday, I'll tell you that. We were like 20 likes shy of the next account. He's like, nah, you ain't getting it. You ain't getting it today. And I was like, damn, he means business. He means exact likes.
They know. Nah, I'm generous usually. On that day I was
one of my students won the account on Tuesday, like from the random generator.
Damn.
He was so hyped. I was like, that's crazy odds. Let's go. Yeah. My first stream.
I had someone also in my group winning 2 accounts in the same week.
Really?
I am not beating the rigged allegations on that one.
Yeah, I definitely didn't beat the rigged allegations for my first stream. One of my students won. He's like, thanks, Abiz. I'm like, I didn't pick you, man. But hey, maybe I did. Maybe me and Amos are in cahoots.
Yeah.
Someone took their likes away because
Yeah, I'm pretty sure they did.
that's like diabolical.
Yeah. All right, let's see. I don't like the close here, guys. That's so weak.
There will be a day where we open up on indices into like a 4-hour level, and I trade indices at 6 p.m.
You just full pour the 4-hour gap.
Well, sometimes we on you know what, on a Wednesday maybe if we have an FOMC like a PM session reversal, I'll text you.
Yeah.
I'll say this day I'll come on stream and I'll trade during Asia. Because those are the only times I trade during Asia, when the 4-hour candle at 2 p.m. reverses, or it consolidates and then 6 p.m. reverses. When we're in the middle of this range, it's just like I just can't do anything.
Okay, the risk is minimal on that one. I won't lie.
Gold also edged that 4-hour high, or else that would have been deep.
It's gonna start moving right now.
Neville's, you know what's up. Yeah, if we consolidate near key level and then we open into it, that's the Asia ascend.
And then the last bar goes against your bias, so then the weak close, strong open.
I'm full porting your signal, buddy, so
I'm actually not gonna take it right there.
I was locked in. I was ready. You were gonna be my first winning trade of the week. Amos the savior.
Let's see if I can grab something here on the flip. I'll try to short here on the flip. If we get it. I'll try to short on the sell stop. Which is something that is pretty unusual. Probably will not see me take that too often.
Question: how do you fade out the traps with price action within a range of PD arrays? Filter your swing points. So whenever you have a PD array, filter what requires you to like trade that PD array.
Do we need a flip now? If not, we start accepting here. I will not be short bias. We had a very, very strong open, so we'll see if we can flip right now. But if we flip back below 203, I am going to be in sales for sure. As soon as we flip below the opening price, I'm going to full pour shorts. For show, for show. So within the next, I would want to see this next 5 minute. You see how it's opening up higher? If we dig below the open, I am gonna go shorts. I'm requiring a lot of things to happen before answering, but that's what I want.
These PSP candles on the 1-hour meeting. Now, so whenever we look for like a precision swing point, you have to filter it with a key level. So what I would recommend for everybody when you're looking at like key levels in the market, like a gap or a high, make sure that that one level is where you then apply all of your SMTs or whatever other filters you use. Needs to be from a key level first. It's very, very common to just look for a PSP in the middle of the range. It's not going to do anything there. Also, an SMT in the middle of the range is not going to do anything for you. Filter out where you look for these things so that you don't end up just randomly taking every SMT that forms. The best ones to use are gaps. So like higher time frame gaps, like a 4-hour gap or a daily gap. Like Amos told you earlier, when you have these higher time frame levels, then you can go down to your lower time frames and start to find ideas, build trade ideas. So just set alerts at levels and then kind of ignore what price does in between that. That's my recommendation. That's what I do. I could care less about what price is doing in between key levels. I just wait for key levels to be engaged. Old highs, old lows, and 4-hour gaps.
Did not see the trade. Right here, we opened up higher. Someone said, Afiz, you need to take him under your wing. He's about to get clapped looking for shorts. I mean, can say whatever in the
Bro,
last
you just
27
I
trades.
just don't even read. It's okay. Someone in my Discord messaged me saying like they're making fun of you in the stream chat, and I'm like, I mean, they were calling me a nerd on Tuesday, so I think this is progress.
I mean, yeah. Within the last 27 trades, won 21, so it's, you know, you
Yeah,
can say
I mean,
whatever.
it's hard to talk shit about that, right?
Yeah. We say men lie, women lie, stats don't lie.
True, exactly.
Yeah.
I like that.
That's the quote right there. I mean, we've had just terrible Asia session openings within the last week. I took 4 break-evens this week. 4. No losses though, which is good. 4 break-evens, and right here, if the open would have flipped, I would have been in a short, which never happened. But you know, yeah, this week, that's the thing though. It's like if you don't have any direction from the opening hourly bars, like we are stuck within a 40-point range in 2 hours.
It's
Pretty
just
much
an
nothing
inside
to do
bar.
there. Even if you try to play off of the 8 p.m. open, it's pretty hard. It's pretty hard to read. We're managing risk now. Every day is a tradable day. Yeah, men lie, women lie, numbers don't. I think that's the quote. Yeah.
Like Amos, what I did is I just put an alert at the 4-hour high and low on Nasdaq. While we're inside this range, it's just a range. I look at this entire candle as a range, and I'm like, okay, how are we supposed to know which direction to go in?
Yeah. I mean, the size of the candles also, they tell you pretty much like a very good story. Like even if you sweep the high and close bearish, it's very hard to project a move bigger than the current candle's range, because you know there's a pretty big likelihood of you sweeping both sides since it's such a slim candle. It's 36 handles.
Yeah, it's also like Friday after Thursday expansion. Today could just consolidate all day and form the close of the week, right?
Mm-hmm.
The problem is like when you look left, there's really nothing that Nasdaq is going to hit today. In my opinion, like this weekly candle should close back in the range. So it just makes every session a little bit more choppy, right? Like yesterday, it was so one-sided. We were so bullish. Like we had like, I don't know, 6 equal highs in the daily charts. Those types of sessions, when you get an entry, you know, you're very confident that you're going in the right direction towards the drop today.
Yeah, someone said some of my best trades are the ones I don't take. Is that not Mark Douglas that said that? Some of my best trades are ones
Trading in the zone?
are the ones I don't. Yeah, trading in the zone.
Filtering out losers is definitely a big part. I think this week I would have benefited from just going break even more. That's the one thing I'll probably journal for myself, honestly. I round tripped. Amos, you should have seen. I round tripped so many of my trades.
Wait, is the word round tripping?
Round tripping
is a poker word also, no?
I think so. Yeah, it's just like I don't know where it comes from. That's a really good question.
Is it not like when you have like pocket kings or like pocket aces and then you're not aggressive within the first round? Like the first.
Historically, yeah.
What's that?
I don't know where round tripping came from, actually. I don't know where that term came from, but it's definitely a term. I think it came from
there's a word in poker.
Selling. Yeah. You're like buying and selling on the same day, like your options or something. I don't know. All I know is that this week my trades go up 1 R and they come back 1.5 R and stop me out.
Wait, let me ask Claude.
That's a lead ball knowledge. I was about to ask chat. I'm still living in like 2025, I guess, using chat, not Claude.
Let me try to look for it. I asked, what is the word for not playing aggressive in poker when you have pocket kings and lose to someone who flipped the right card on the last one?
While being a bitch. No.
No, there's no sandbagging, they're saying.
Sandbagging. I haven't heard that one before.
Sandbagging or getting rivered.
Oh, getting rivered. I've heard that. Yeah.
Or slow playing. It's either slow playing, sandbagging, or getting rivered. I think the most common
Round
is
trip
getting-
like airline tickets. I don't know where that one. I don't know what you guys say round trip too. Can't just be me.
I don't say that word really. I won't lie. There's multiple words I would never say because I'm just French.
Just expressions that we just don't have.
Yeah. I use the simple words and stuff like.
All right, Moss. As a Quebecois French speaker, how different is the language from like French?
It depends on where you're from. It's like if you go to like the further away you are from the cities, so like Montreal and the big cities, then I would say the deeper the accent. Like the accent will be very hard to understand. And
what about if you were like speaking with like a Parisian, like someone from like Paris or like?
Oh no, like my French is like very close to it because I don't necessarily have a huge accent because I was born in Algeria. So I carried like some French because French also is a language there. But I carried like the same accent when I was like 4 years old, you know. So
Algeria's beautiful, bro. My family's from like East Africa. I went to visit, like Nairobi, Kenya, Tanzania. So
way.
They have a bit of family in North Africa, but more so in like Morocco. But Algeria, we visited. It's absolutely
no way. Okay, so where are you born originally?
I was born in Canada. My brother was actually born in East Africa. My parents moved here when like right before, essentially like a year before they had me.
Damn, you're East African. Shit.
Yeah. Well, my mom's family is kind of like there's a lot of colonialism in East Africa. So my mom's side of the family has some
what country exactly?
What's that?
What country exactly were your parents born?
So both my parents were born in like Nairobi was my mother, like that's Kenya, and then my dad was born in Tanzania, which borders Kenya.
How is your hair straight?
Very small border.
How is your hair straight?
Because my mom's side of the family is actually like Persian and like mixed, and my dad's side's like Indian and East African. So there's I definitely take more after I think my dad's side of the family. My mom has like an afro and like green eyes though.
Okay, I was like,
she's got the curly hair. Yeah. My brother has a little bit more curly hair than me.
Damn. Okay.
I got more of like I think like the Indian look from like my dad's side of the family.
Okay.
But, yeah, it's pretty cool. Like our family in East Africa looks nothing. It's funny, man, because like some of our family in East Africa was like white, like my mom's side of the family, like Persian, and then others were like brown and others were black. And we go to family reunions and we have every single race, and like all over the world. It's like it's crazy.
Yeah, that's cool.
Have you ever been to Have you ever been like to other parts of like North or East Africa?
No, I went to Tunisia.
Okay.
Yeah.
You also speak French in Tunisia as well, right?
Yeah, like Morocco, Algeria, and Tunisia. They speak a little bit of French when with the language, like the normal Arabic, but it's like they're not that good though. It's like they can understand everything in French, but most of them are not like fluent.
Yeah,
I'd say it's like more like slangs. Right, that's cool. Did not know you were African. That's good. My African brother.
There we go. Although I don't speak any Arabic, unfortunately. My parents do.
I actually don't also.
You don't? Yeah. Are you a Muslim as well if you're from that part of the world?
Yeah. I'm because the thing is I'm from like the mountains. I explained that to the chat multiple times, but I'm from the mountains, so like the I would say the, how do we call those? The native people in Algeria, they spoke a different language than Arabic.
Okay.
Yeah.
Oh, like
So that's
the indigenous people in the mountains have a different dialect.
yeah, exactly.
Damn, you gotta go back and visit and to like see how much has changed. Were you born there?
Yeah, I was born there. I came to Canada when I was 4, actually.
Okay. And have you gone back since or no?
I went back when I was 13, but never went back after.
Dude, I went to South Africa last year, and then I visited some of my family in East Africa, and it's so different. It's like so developed now. Like Nairobi and Kenya, they're like so much different than when my parents lived there in the 70s and 80s. Like big mega cities now.
Yeah, that's cool. All right, guys, how many likes do we have now? Let's see. 391. Okay, we're approaching the second like goal.
Close. We're getting very close.
Make sure to like the stream. Subscribe to the channel. Also, we are now at 150,000 subscribers. Damn! Wait. Let me see the competition where they're at. Because we are now stepping on the competition. Okay, we're probably gonna be the biggest in like a month. If we're not already the biggest in terms of views, I'm pretty sure we are up there.
Let's go, bro. We're just getting started.
Yeah, 100%. Just getting started. It's been literally just a year, or not even a year now. No, now it's been a year exactly, or a little bit more than a year. 410. Okay.
I could definitely do some teaching in these streams too if they're slow. I can like prep some slides and go through some parts of like my model or whatnot. That'd be cool.
I think we can ask the chat if they would be down, because like I said, I think by me being a host since October, very early October of 2025, I understood. One thing I understood, Fiz, is that some people are just here to completely vibe, bro. I'm saying they're here to vibe. They're here like
that is fair.
To hear something in the background and to just chill. Some people are like there to learn your model and like get education, because that's their time of the day where they get off work, and they don't really want to learn anything from a video. They really want it to be interactive. But some people are just here to vibe, so like we got to get to know you guys a little bit more in terms of like how much technical focus we can put on those sessions, because sometimes some people are not necessarily too happy with talking about fair value gaps.
That's fair. That's actually fair. That's true. I feel like it, but honestly, at the end of the day, people are probably more tired as well.
Yeah. All right, let's run a poll. Can we do a poll, Tony? Let's run a poll and see who's here for vibes, who's here to learn, and who's here to trade. Okay, when I'm talking about trades, like you guys know.
Vibes, trade, or learn. Great 3 options.
Okay, but if you are there to like just give us some more like intel on which one you're leaning a little bit more towards. I'm here for LeBron James. All right. Let's see that poll.
I see keep your fair value gaps at home. And this guy's name is Fibs, not Fair Gaps. That's so funny.
50% said vibes. Shit.
Yeah, this is
out of 134 votes. I knew that. Okay, let's see. let's keep it running though. Because
Yeah, I can
I'll
I can
tell you
definitely
brutally
agree.
honest. Usually when I open up a stream, I usually always open up a stream on during the PM session if I did not take any trades. Always. Okay.
Do you?
Yeah, like I just keep it in the back, and
Yeah,
I chill on
just to
my
look and
phone
stuff.
and I look at my things. I edit videos sometimes, but it's really more for vibes. Like
Fair
when I
enough.
open up a stream, for sure. I'm telling you. I remember like back in, I think it was like 2024, bro. I would just open up Brian's stream. I never said that to him. Brian's stream in the PM session. Just you had like a background music. I would just
Yeah,
trade.
it's just like background noise while you're
Yeah,
doing
just
your work.
background noise.
Yeah.
Literally, I don't even look at the chart at all. I just take my own trades. That's the
Yeah, the
thing, though.
thing
It's
for me
like,
is like usually during Asia, for me it's like so difficult to actually find like proper framework to trade
yeah,
that
exactly too. It's
yeah,
like,
like it just survives, I guess, survives. But I do love to teach. If that's something that people are interested in, I can definitely have like 4,000 Figma slides for different concepts. Every part of my model is I've taught like through some sort of medium. Usually, like I have slides, and maybe you've seen like a YouTube video of mine or something ever. It's like so I have lots of concepts that I can kind of teach in more structured ways to make it a little bit more tactile than just me talking on a chart, for example.
yeah.
But of course, people that aren't interested, then the YouTube channel exists for that reason. Shameless plug. You guys know Figma is my thing, bro. I remember last year spent like just an insane amount of time on these Figma slides, but it's nice because they never go away. So at least I have like parts of my model now that whenever I'm teaching, it's like I don't have to like do it on a slide in the most chopped way. I have like a proper slide for it.
Okay, so now we have like more than 250 votes. 45% of people answered vibes.
Still vibes.
37% of people answered learn, and 18% of people answered trade. But I would guess some people are also here like vibe and trade or learn and trade. So
Yeah, they're probably somewhere in the middle.
yeah. So yeah, that's really what I thought also it would be about. Just from how I got that, it was really from the how aggressive people would type in the chat, or like the speed of the comments. If we got into like a heated debate, or like we were just talking and vibing, then a lot of people would just spam the chat. And then
Yeah.
when I would go like and talk deep about my model, then silent for like 30 minutes.
Facts. Yeah, it can be a bit boring. It can be a bit boring. I agree. I'm also not the most like fun or captivating teacher. I think I'm a bit boring. Very
Yeah.
much so. Like, here's what I'm showing you.
Yeah, same for me though. It's like I
Yeah.
learned to talk about my model in a way where I would make anyone understand it. Sometimes
Mhm.
that's really the reason why, let's say instead of saying order block, I'll just say break of structure. And like all those little things that would make someone just understand, even if he doesn't have a clue what
For
ICT
sure. Yeah. Being
means.
able to
I
translate
really
kind of
got
your
to
knowledge
understand
to a
that
beginner.
also.
And
Hmm.
yeah, it's actually a very, very powerful skill. There's a very famous quote. It's like, if you can't teach it to me like I'm 5, then you probably don't understand the concept or
Yeah,
kind of the structure of what you're actually saying well enough.
yeah,
People who only have the ability to communicate ideas at a high level typically don't understand the foundations of that idea, right?
yeah.
There's
a
a book
hundred
called
percent.
George
That is
Orwell,
so true.
Politics in the English Language, and it's exactly why when you read like any sort of legal document, or you read a bill, or you read some sort of law that's been passed, it's overly complex. Like they use so much jargon and political wording, and you read it and you're like, what the hell are they saying? Like this makes no sense, right?
Yeah,
And the argument is that when you have complexities of language and even complexities of ideas, you can kind of hide a lot of the true meaning of what that thing is behind this huge grandiose complexity. And then if you
yeah.
could strip it down to like, here's what the fundamentals are, this is why this thing is good or bad, or this is what I'm trying to say in a very simple way, it means you actually have a
Hmm.
good understanding of what you're talking about.
Yeah, I think this is also one big problem of the information that was available, I would say, to us when we started. I think there was just too many things, too much fluff. When you went into a YouTube video, it was just 4 hours and maybe 20 minutes of that was true value, and then the rest was complete fluff, you know?
Yeah,
Or like just
that's why
words being put
when I
in
teach
to.
Tuesdays, I try and keep it very like my YouTube videos are all like lectures for the most part, but I have to keep them to an hour, and I never really go like crazy off script. I have like the things I want to talk about, and I try and make sure I hit all the things in like a
Yeah,
very structured way, or else I know myself. I'll just brag.
yeah,
It's a skill. It's definitely a skill I have to work on. It's something. It's not the easiest thing to teach.
yeah,
It's
for
because I learned.
sure.
It's because we learned from ICT a lot. So we were used to like the 3 hour rambles and the 30 minutes of gems hidden in those 3 hour rambles.
Yeah. All right, guys, 458 likes. Let's reach 500, then 600. So let's hit 500. We're gonna start right now with the giveaways. Okay, so we owe you guys 2 accounts now because we are at 450.
Is
Yeah,
an order block and a break a structure the same? That's an interesting.
basically, yeah. It's like an order block is just a high, a low, and a higher high, depending. Like some people call those, how do we call those? Like mitigation blocks. Do you call those mitigation blocks when you just have that? Let's say those.
I can share my screen actually and maybe show exactly what those differences are.
Look, that right here. You know that little
Yeah,
consolidation before we
that's
break.
like a break or a mitigation. Yeah, so
Okay, so you call those mitigation.
so like a break
Okay,
is
I call those order blocks.
they're honestly the same thing. Like
Yeah,
like
they're the same.
a breaker and an order block are actually the two opposing sides of the same thing. So if we add this, guys, like you see these up close candles into this high. When price closes back through these up close candles, this is a order block, or some people call this a change in the state of delivery. It really means the same thing. So that right there, when you close through the opening price of that body, you might be able to see it better on a 15-minute chart, right? This one candle. When you close through the opening price of that body, that would be considered your like change in the state of delivery. Now, a market structure shift just means this. You just have to close through the low. So this right here is your market structure shift, and this right here is your change in the state of delivery or your order block. All that's the difference between these two things is one of them is the body of these candles, and one of them is the wick low of the same set of candles. Okay?
Yeah.
There's also this in here would be a like sweep of liquidity, right? We're sweeping liquidity. You can see we're taking out a high and we're coming back into the range. Whereas if we close through lows and we start to expand, then we're breaking structure. So there, a lot of these terms mean the same
yeah,
thing.
they're all the same thing. In my opinion, what is really important to know is not the different words, is the meaning of it. It's like, what do you anticipate from that structure break or that block being created? Do you expect price to go down from it or up from it? And what is truly happening within that structure? Are you expecting sellers to cover their position so there's huge aggressive selling right after, or a squeeze from the opposite side? But let's do the giveaway right now because we're getting freaking late. So
Let's do it.
Okay, let me do the first word, chat. Let's do, okay, the first word will be this. That's gonna be a good word. All right, let me know, Tony, when it's ready. We're currently at 487 likes. We are far from the last like goal. First word, casino. So usually the words that we use within the giveaway is always either a conversation that we had or something that was necessary for the conversation. So casino number 1, we talked about the importance of letting I would say putting in a lot of trades before seeing the real statistic of your edge. And we were talking about the fact that casinos only have 3% edge, but they win from people full porting, so being back to zero, so they can now not invest, or people playing enough hands, so then they see the true expected value of their system. So let's select the winner. Wait, who's the winner there? I don't even see it. All right. I resetted my... Okay, congrats. It's Ultra Sky 9967. Congrats, you won
Congrats,
a 50K
brother.
select. We're gonna do 50K selects tonight. So let's do two more. Let's do... And it's ready. All right, next word, steak. Some steak.
Ooh,
512. Okay, we're weak on the likes tonight.
What did we get last time? We're at...
Some nights we go up to like 750, 800.
Really?
Yeah.
We run up
I
our
guess.
likes.
I guess I'm not pressing enough. All right, let's do. Let's select the winner right now. Congrats, Neetswa. Congrats, brother. You won a 50K select. Make sure to have your email in your YouTube description and also to type right now in the chat so we know you're here. Now, let's do one more word. All right, this is going to be a good word. Try to guess the word, chat. Try to guess the final word. Africa would have been good. Africa would have been good. But the word is PSP.
Again, I think we did that last time. Come on, bro.
Nah, I don't think so. I think we
Oh,
did
last time
SMT.
it was SMT. It was SMT.
Yeah, it was
right?
SMT. Now it's PSP because I was saying like back to back multiple times how I see the value in PSP because I see it multiple times on my own chart also.
Absolutely, bro.
Yeah.
Start working into your C2 trades, and you're gonna be like, okay, we can cook.
All right, let's select the winner right now. Congrats. Sheet Talon. Congrats, you won a 50K select. How many likes do we have now? I think it's yeah, 529. Not enough to do the fourth. So GG's guys. It was a pleasure to be with you guys tonight. I did not take any trades, unfortunately. This was a pretty choppy week, but a lot of good discussions with the fees. It was a blessing to be with you tonight, my brother. Any do you have any closing words?
It's always a pleasure. I'm excited to come back next week. I know next week we're probably gonna get some better price action as well. So we'll
Hopefully.
definitely be able to cook something up.
Hopefully. All right, guys. So there's not going to be any sessions tomorrow because Asia's last trading day is Thursday. So see you guys tomorrow at 12:30 p.m. for the trading floor. Peace out, guys.
Peace, guys. Have a good one.